All right, here we are live streaming the Committee on Financial Services is going to be starting any second now. So at 10 a.m., they're going to go live on their site for the financial services meeting on stable. And specifically, this hearing is called, there you go, see, hearing entitled Understanding Stablecoins' Role in Payments and the Need for Legislation. So we've already gone over a little bit of preview. I read through some of the stuff that is most relevant. If you're watching on Twitter, then I can link to the interpretation that I think is pretty straightforward. They gave a definition of some of the terms in the 72-page document that was released as the sort of the speaking points, general speaking points for what this event is going to be about. And we'll take it one step at a time, see what they actually say, see how this affects us moving forward. I think it's probably going to be fine, right? Fine, okay, but we won't know until we look through this. Right? So let's see. Bring your comments anywhere you'd like to leave them. We've got, let's see, the comments coming through from Twitch, we have comments coming through from YouTube. So wherever you're watching, do be sure that you hit that thumbs up and that you're supported by the channel. We've changed the broadcast quality of what we're broadcasting here from StreamYard, so we're up to 1080p, and we've changed the microphone input. Hopefully, this is good, better than the last time we tried the StreamYard setup. Automatic Beat says, "Good morning, crypto DGen fam." Hey, I knew what you were trying to read there, or trying to write there, or DEG fam, and made sense to me. It really did. So let's see. All right, go ahead. Open up some of my media. Exactly. Hey, cool. All right, and then also make sure that I've got okay output going to the correct speakers, right? The headphones here. Mr. Frank is in the chat. He says, "Let's go." I'm talking about, man. They didn't even announce this meeting until I guess 2 days ago, 3 days ago, and all of a sudden we're supposed to believe that anything they discussed in this meeting, this closed door session, should be binding with no public comment. Hmm, seems suspect. That's why we got to jump in and watch the Watchmen. And I've got Mr. MineYourBiz pulling up the chair next to me. She'll have her headset on just a moment here.
GM.
All right, let us know if you hear both of us pretty clearly in in our mics. We're just using gaming headsets and a very simple setup here, but give me a thumbs up in the chat or whatever else. It started to sound pretty good. Not a bad setup, right? So we're streaming at higher quality now, and yeah, it's be fun. But yeah, they say it's gonna be getting shortly. Let's see, they're already a minute late. Oh my, a minute times the number of people that you see in that room is the amount of payroll that is being wasted. We could probably do a calculation as to exactly how much taxpayer money they're wasting by being late. And you know what? In their case, I'm not above it. I'm really not above it. Happy to do that. Do me a solid and hit that thumbs up if you haven't already, and make sure you share this link while we are live. That's the best time to share out this media so that we reach the maximum number of viewers. If you think that this is important to know, then maybe somebody you know would also feel the same way. I think this information is important for you to know. And if you are on Twitter, we're going to go ahead and pull up a live stream on Twitter as well, so we can see your comments as they come through. The comments on other platforms tend to push through pretty easily, but this one is not so easy. Not so easily viewed. Do me a solid and share the broadcast as well while we're live.
Good morning. Welcome you to the first meeting on stablecoins. We'll have our hearing today entitled Understanding Stablecoins' Role in the Payments and the Need for Legislation. Without objection, the chair is authorized to declare a recess of the committee at any time. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I want to thank our witnesses for all being here today. And I'd now recognize myself for 4 minutes to give an opening comment. Today's hearing marks the official resumption of the House Financial Services Committee efforts to enact payment stablecoin legislation. Last Congress, Democrats and Republicans worked together on a proposal to bring about payment stablecoin issuers under a regulatory framework in the United States and allow stablecoins to unlock their potential as a contributor to a modern payment system. That proposal from September was noticed for today's hearing. Last year, members from both sides of the aisle reviewed the proposal, provided feedback, and worked to reach a compromise. But the clock ran out on those efforts due to the fall elections. That bill is an infant. It's a baby. It's not necessarily a beautiful baby, but it's our baby, and it's named Maxine McHenry. And so it's here today for both sides of the aisle to review and consider and to hear from our panelists. So today we're going to discuss it, think about revisions. How do we address the benefits and risks described in the Biden administration's 2021 report on stablecoins? The Financial Stability Oversight Council recommended that Congress pass a legal framework. And Chairman McHenry and I are committed to working across the aisle to pass payment stablecoin legislation. And we're hopeful that members in this room on both sides of the aisle will build on the foundation of that work. Luckily, we've made significant headway with the proposal that we've noticed. By requiring payment stablecoins to be backed one-for-one by high-quality liquid assets held in reserve, the proposal mitigates run risk. The legislation also requires stablecoin issuers to comply with redemption requirements, monthly attestation and disclosures, and risk management standards. These are just a few ways that this legislation establishes strong, much-needed consumer protections in this area, just as Ms. Reynolds-Hands outlines in her testimony today. However, there's more work to be done. It's my goal that our payment stablecoin legislation will provide different ways for issuers to maintain and come into compliance. I believe innovation is fostered through choice and competition. And one way to do that is through multiple pathways to become a stablecoin issuer, though with appropriate protections so we prevent regulatory arbitrage or a race to the bottom. I'm glad to have Superintendent Harris here from the New York Department of Financial Services to explain the framework that's currently in place in New York and discuss their requirements for payment stablecoin issuers. Finally, I want to reiterate the urgency for those of us in this room to work together and pass this needed legislation. Recent reports indicate that the digital asset developers are leaving the United States to go to countries that have more established regulatory frameworks for digital assets. That's not good for innovation, jobs, or consumer or investor protection here. The ongoing turf war between the SEC and the CFTC over digital assets is also just unhelpful, but it's also unsustainable. When you have two agencies contradicting each other about whether one of the most utilized stablecoins in the market is either a security or a commodity, you end up with uncertainty. Federal regulators have made it abundantly clear that without an act of Congress, they will continue to interpret their authorities broadly, even when in direct contradiction with each other. That's why it's time for Congress to act and pass legislation to establish a regulatory framework for payment stablecoins. We look forward to hearing from our witnesses, and I look forward to picking up where we left off last fall.
All right, so that
Now let me
preamble,
turn to
I
the
think,
ranking member and
I
recognize
think I
him
agree with a
for
lot
4
of it.
minutes for an
There's
opening
quite a
statement.
bit that we need to get
Thank you,
figured
Mr.
out,
Chairman.
or they need to figure
For
out, so
holding
that
this
we have,
hearing to further examine the role of
we at least know what they
stablecoins
think
in
about
our financial
stablecoins.
system. I'd like to also thank the witnesses for their appearance here to help the committee with its work. Thank you. The last several months have marked the effective collapse of much of the crypto industry following the abrupt demise of Tether, FTX,
The
Silvergate
demise
Bank,
of Tether?
and countless other cryptocurrency the companies.
Reports of Tether's death are
Also
greatly
witnessed the massive
exaggerated,
failure
sir.
of Silicon
Lynch.
Valley Bank and Signature Bank, which was also a crypto-centric bank. In the wake of these destabilizing events and their devastating impact on the crypto sector, which lost 2/3 of its market cap. It went from $3 trillion market capitalization to $1 trillion, 1.06 as of this morning. Stablecoins remain a relevant oversight topic, particularly considering that they fall within a subset of cryptocurrency are intended to be non-volatile digital assets by intent and design. As reported by the President's Working Group on Financial Markets in its report.
Okay, I'm
on
going to turn this guy's
stablecoins,
volume down a
and I
little bit
will
because
quote,
yeah, what
"If
he's saying is weak
well-designed
sauce, and
and
yeah,
appropriately
Automatic Beats
regulated,
dropped some facts
stablecoins
here too,
could
saying
support
his
faster, more
tie
efficient,
knot is weak
and more
AF, not even a
inclusive
full
payment
answer. I know,
options." Close
right? How do you manage to work
However, the
wearing a
panel
tie
also
every single
underscored
day
that the
and not even know how to tie one on?
stablecoins
Come on, man,
present
grow up.
a variety of risk factors that are not currently subject to robust regulatory standards and cohesive oversight.
Patricio
To
jumps in
this
and says, "Good
extent,
morning, all.
Chairwoman
Coffee? It's
Waters
a
led
very
our
good
committee's
idea." And I
bipartisan
went for something a
investigation
little more
last Congress
intense.
to
And
examine the risks
and says
to
Gensler was
investors,
destroyed
market
yesterday. I can't wait to
integrity,
cover
and
that.
financial stability
Let's
associated
stay
with
focused on
stablecoins.
stablecoins for
We
today.
reviewed the
Frank
technology
saying,
behind
Mr. Frank saying, did
stablecoins,
that
their
fool just
current
say the
use
demise of Tether?
cases,
Yes, he did.
state regulatory structures,
Yes,
and federal
he
oversight
did.
gaps. And we also examined the role of stablecoins in promoting financial inclusion, potentially. As we learned last year, stablecoins are a type of cryptocurrency that issuers assert are pegged to stable reserve assets, such as the U.S. dollar. Issuers claim that
That's your
stablecoins
first
serve the
mistake, is
purpose
thinking
of
that the U.S.
payments with
dollar
the
is a
potential
stable
to
reserve asset.
improve payment infrastructure and increase access to financial services. In reality, however, we know that stablecoins are rarely used for payments, but are instead used to facilitate speculative cryptocurrency trading and investments. Stablecoins also contain structural fragilities that make them vulnerable to runs and pose risks to monetary policy, national security, financial stability, and fair competition. It is worth revisiting questions of whether stablecoins are even needed if they are hardly used for the purposes intended. If our goal is to improve our payment system and financial inclusion, we should instead consider advancing public sector options such as the FedNow payment system and a publicly issued digital dollar.
It was only a matter of time
Considering these
before he mentioned
insights, I have
FedNow.
trouble
There it is.
understanding why this outdated legislation, which is not cognizant of the recent disasters in the
Not
crypto space,
cognizant of the
that has
recent
structural
disasters.
flaws, is attached to this hearing. I share concerns about key parts of this
Do
with
you
the
share
14
concerns?
consumer advocacy groups that sent a letter yesterday expressing concern about the grave risks that stablecoins pose to households and our financial system.
I'm
The
concerned that you
concerns are
think Tether is
numerous,
dead.
but I will share a few. For starters, giving states the authority to regulate stablecoins allows issuers to easily avoid federal oversight and seek out more permissive states.
Yeah, that's the
Additionally, the
point,
bill
dumbass.
identifies the Federal
Yeah, states'
Reserve as
rights.
the primary regulator for
We
oversight
know where you
and
land on that
provides
kind of debate.
issuers with the access to Federal Reserve programs, such as the discount window, master accounts, and payment services. These programs are typically limited to banks who are heavily regulated, and that is for good reason. Most importantly, the bill does not address the biggest lessons we've learned in recent months. We've witnessed the risks that can occur when players commingle customer funds. This bill does not mention how conflicts of interest will be managed,
Banks have never
particularly between
commingled customer
issuers
funds, have
and
they?
exchanges.
Never.
I also continue to have concerns about allowing non-bank entities with no regulation to issue bank-like products. If the recent bank runs have taught us anything, it is the danger of allowing shadow banking products, particularly stable coins, to issue deposits like products without FDI insurance. So I strongly
FDI.
believe we need to separate
FDIC
crypto
surely is what
assets
you
from our
meant.
banking system,
Okay.
and this bill does just the opposite. With that, I ask that we take the time that we need to get this right rather than try to get this first. And I yield back.
Thank you, gentlemen.
You sound
The
so
chair now
smart by saying
recognizes
get
the
it
chair
right
of the
versus
full
get it
committee
first.
for 1 minute.
Good for you. Pat
Payment
yourself on the back
stablecoins are an
there.
important part of the digital asset ecosystem and have the potential to be a cornerstone of modern payment system. I want to thank the subcommittee chair and ranking member for their engagement on this. I want to thank
By the way,
ranking
none
member,
of
the
what
former
I'm
chair of the
saying here is
committee, for
intended
her
as any kind of legal,
engagement.
financial, or
We
business
spent,
advice. This is entirely
The
parody.
ranking member
Some
and
of
I
this is just a
spent
joke to me.
a significant amount of
Like,
time
obvious,
working,
just
and our
joke to me.
staffs working together with Treasury, with the Fed, with members of our committee last Congress. And I thought it was important to acknowledge that good work as the foundation of our discussions.
I
And the
should also
frame
mention
laid
that
out
none of my
between these
opinions on this live
negotiations
stream
between
are
Ranking Member
reflective
Waters and
of
I
any
last
of the groups that I
Congress when
work
she was
for
chair.
or my clients.
I
This
think
is
it's
just me
important that we lay that
giving a
down
hot
for
take
public airing
and
and
kind of making fun of these
understanding
public
of
servers
what we
who in some cases
negotiated.
very
And this
clearly
is the
don't understand
continuation of
either
that good work.
technology or
But it's the
or the
first
possibility
piece of
that
committee work that
the
we've
banking
done
system is already so inherently flawed
in a
that
setting
it could
like
just
this.
it could safely be slashed
A
and
lot
burned.
of things have happened since this draft. And we want members to engage in this, especially new members of this committee, and have ownership of the legislative product that we will be moving. But I want to thank Ranking Member Waters for her engagement on this. And I think she and I both will confess that this bill is imperfect to us in many, many ways, to each of us in different ways. But I thought it was important to ensure that a Democrat-led committee, now a Republican-led committee, that we acknowledge the intellectual framework around us having a modern financial regulatory regime at the federal level. But consumer interest is not served by us not acting. We need to have a federal regulatory regime for stablecoins. It is important for us internationally and domestically, and it's very important that we have the understanding on a bipartisan basis, the utility and importance of this legislation. And with that, I yield back.
Thank the chairman. The chair now recognizes the ranking member of the full committee for 1 minute.
Thank you very much, Chair Hill and Ranking Member Lynch. And I want to thank all the witnesses for testifying today. Let me start by saying last Congress, my staff and I
Great.
worked extensively
The Crypt Keeper.
with
Here we go.
then Ranking Member McHenry on legislation to provide a regulatory framework for payment. He's absolutely correct about that. However, what did not happen was we did not complete the negotiation so that we can move forward. And unfortunately, a lot of things have happened in between. And of course, in addition to FTX and a lot of other things going on, this bill that we have posted in no way represents any final work. And because so much has happened in between, we needed to get back together in negotiations. But Mr. McHenry alarmed me somewhat when he said that the members
Okay, I totally got to walk back the way
on
that I
his side
spoke
of the
about
aisle
Maxine Waters,
had come
because
up with a
she's
whole
showing a
new
lot of
bill.
humility and a lot of
And I said to
vulnerability
him,
in
well,
the process. This is actually
to
this is
any
actually what we do
negotiations
want
having
from
made up their
our
mind already.
public officials.
And
Is
I
we want them to
suggested
just admit
that
when
if
something's
he
not
was
quite
going
ready yet.
to have a Republican bill, that we would go back to work with a Democratic bill. Then we'll get together and then we'll decide who's going to give what we were going to do to work out the differences, et cetera, et cetera. That has not happened. So let me just say, the posted bill in no way recommends the final work on stable coins by negotiations between the two of us. The bill has been posted. The chair wanted to post the bill. It does not represent any final product of any kind. And so I think we're starting from scratch to deal with stablecoin. We must deal with it. We must get a stablecoin bill.
From scratch.
I think we can do that, but disregard the bill that has been posted altogether. I yield back.
Whoa. Okay, so because it's not the DNC's
Gentleman
bill,
yields back.
because it's not the Democrats'
My
bill,
response to that
scrap
would
what
be,
was just
we
proposed.
welcome any legislative effort from the minority in this regard in a constructive way. And on behalf of Republicans, we've just been looking at the September draft led
Wow.
by Mrs. Waters
You
and
can't make
Mr.
this stuff up.
McHenry, and making our own changes, doing our own due diligence.
Okay,
And
I
that's
thought it
what
was
this
because she
hearing's
actually wanted
all
it to be done
about.
right,
So
but it's
we
because she
agree
wants it
that
to be done
in no way is the
with,
bill posted to
you
the
know, it
hearing
needs to be
the
flavored
be all
blue
or end all. I
instead of
made
red.
that clear in my opening statement. And so this really is an opportunity for both sides of the aisle to fully engage with this superb panel and think through the right way to revise the good work of Waters McHenry last fall. Before I call on our panel, I want to wish my colleague Jay Jang a happy birthday today. And I know he wanted to start out his day There's nothing says birthday like a stablecoins hearing.
We're paying taxes for this?
Today, we welcome the
the
testimony of
point,
Adrian
Mr. Hill.
Harris. Ms. Harris is the superintendent of the New York Department of Financial Services. Prior to her service there, she was in the senior roles of both the Treasury Department and the White House. Jesse Austin Campbell joined us. He's an adjunct professor at Columbia Business School, where he teaches a class on blockchain markets, infrastructure, as well as serving as a managing partner at Zero Knowledge Consulting.
I hope.
Jake
that's actually-
Cervinsky, Mr. Cervinsky is the Chief Policy Officer at the Blockchain Association, a digital asset association based here in Washington, D.C. Dante Desprez is the Chief Strategy Officer, Head of Global Policy at Circle, the issuer of USDC, as well as a member of the World Economic Forum's Digital Currency Governance Consortium. And our final witness is
Make it
Delicia
worse.
Reynolds-Hand. Ms. Reynolds-Hand is the Director of Financial Fairness at Consumer Reports. We thank each of you for taking time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. And without objection, each of your written statements will be made part of our full record. Ms. Harris, you're now recognized for 5 minutes to give your oral presentation.
Thank you, Mr. Chairman. Good morning, Chairman McHenry, Ranking Member Waters, Subcommittee Chair Hill, Subcommittee Ranking Member Lynch, and members of the Subcommittee on Digital Assets, Financial Technology, and Inclusion, and to the hardworking staff. I am Adrian Harris, Superintendent of New York's Department of Financial Services, or DFS. Thank you for inviting me today. Strengthening the nation's regulatory oversight of virtual currency is critical to protecting consumers and ensuring the safety and soundness of institutions. I look forward to sharing with you some key features of the DFS framework and to offering continued assistance as you work to develop a comprehensive national regulatory framework. DFS has been a prudential regulator of virtual currency since 2015. Our virtual currency regulatory framework is the most comprehensive in the country, built on the model of full-scope banking supervision, but tailored for the unique considerations of the industry. It has served well to protect New York consumers, keep virtual currency entities safe and sound, and hold bad actors to account. The department has a wide range of tools to regulate the virtual currency industry, including licensing, supervision, examination, and enforcement. The core provisions of the DFS regulatory and supervisory framework are robust capital and financial standards, strong consumer protections, sophisticated cybersecurity requirements, and strong anti-money laundering provisions. For example, virtual currency entities are subject to custody and capital requirements designed for industry-specific risks. Entities must hold virtual currency in the same type and amount on a one-to-one basis that is owed or obligated to a customer. That is distinct from the traditional banking fractional reserve system. Once an entity meets rigorous standards to be licensed or chartered, DFS creates a detailed supervisory agreement that is tailored to each company's risks. Companies must get approval from the department for material changes in business, including for new product offerings and stablecoin issuance. Entities also are subject to ongoing supervision and are regularly examined for compliance with regulations and those supervisory agreements. If through our supervision we find that a regulated entity is not in compliance with our rules, DFS's enforcement division can investigate and take appropriate actions to ensure that companies pay penalties for violations, remediate issues, and return lost funds to customers. Specific to stablecoins, DFS was the first agency to provide regulatory clarity for these products. In June 2022, DFS provided guidance related to the issuance of US dollar-backed stablecoins. The DFS stablecoin guidance requires one-to-one reserving with cash or cash equivalents, redemption fulfillment within 2 business days, and public independent audits to confirm reserves. As members of this committee contemplate federal legislation for stablecoins, I believe the best path forward is to build on the well-established dual banking regulatory system. Any legislation that preempts the state's ability to regulate innovative financial services would be harmful to valuable regimes that already exist and hamper state regulators' ability to respond nimbly to a changing financial ecosystem. I am proud of the work DFS has done to develop a comprehensive supervisory framework and to foster a well-regulated virtual currency industry in the state. We welcome further collaboration with you to take advantage of our lessons learned and develop a comprehensive national regulatory framework to protect markets, entities, and consumers. Thank you.
Thank you, Commissioner. Mr. Campbell, you're now recognized for 5 minutes for your presentation.
Thank you very much. I'd like to start by thanking Chairman McHenry, Ranking Member Waters, Subcommittee Chair Hill, and Ranking Member Lynch, all the members of the subcommittee and the hardworking staff for the opportunity today. So I want to start with something of an apology, which is to say the debate around stablecoins has been incredibly confused. It's probably been harmful to consumers. It's probably been harmful to the nation. One of the problems is with lack of clarity from Congress, many things are called stablecoins, which should not be. What we need is clarity to define stablecoins so that we understand that stablecoins built right are actually not new and are relatively mundane financial instruments. If you look at frameworks that have worked, like the framework from the NYDFS, these things look like conservative banks, maybe government money market funds. These are the sorts of things we know how to address as a financial system. We can regulate them. And I think there are also answers to some of the issues that already exist in our current system, such as state versus federal. I suggest in my testimony for small to medium-sized stablecoins, they're fine at the state level. When they become very large and systemic, they should probably exist at the federal level. We don't need a $2 million stablecoin being regulated by the OCC or the Federal Reserve. It's not an effective use of time, but nobody is suggesting that JP Morgan be only state regulated. So I think there is a way to make these things work. They serve the purpose of money on a blockchain, and that is what is ultimately the real innovation here is the blockchain itself and the opportunities for transaction that that creates. In the current environment, we are failing at making this happen as a country. Our regulation is currently chaos for stablecoins. If I am an issuer and I want to create a stablecoin, I technically don't know if I'm going to be answering to a state regulator, a federal banking regulator, the SEC, the CFTC, and it puts you in the same position as if you were out with friends and you were going to play, some sports game and somebody tells you, well, we may enforce the rules of baseball or football or basketball, and we're not going to tell you which in advance, and maybe some of them will all apply at the same time. It's unworkable. And what this means, and it pains me to say this as an American, is that things are moving offshore. I can say this with certainty because I advise
Nobody in their right mind is making the crypto business here.
There are other regimes with significantly more regulatory clarity than what we have provided here, where if you are a good actor who wants to comply with the law, who wants to do the right thing, you want to go there because you know you can do it with certainty. And this, it's bad for jobs. It's bad for the strength of the dollar. It's bad for our status as a reserve currency.
It's bad for the
It's
economy.
particularly bad
for
for
spending
national
here.
security, as blockchains have a significant degree of transparency that's not present in markets like actual cash markets, right? When somebody transacts on a blockchain, it's public. We may not always know right now who transacted, but you know the amount, the time, the wallets they traded with, what they sent back and forth. And with the richness of data, it's just a matter of time until you can identify the wallets. This is a huge data analysis tool to enforce our rules on the financial system that we are potentially giving away. Right now, over the past year, the biggest winner has been Tether. They are offshore. They don't work well with us. They facilitate some activity they probably shouldn't. But the chaos is leading that stablecoin to grow while others shrink.
I love that he's
The other
got
thing
that
that's
smile
happening
on his
is other
face.
countries
He's
are
totally
moving into
right.
this space. Just this morning before the hearing, I saw news that Russia is exploring legislation to formalize their ability to transact in crypto. If we don't take the field, others will do so before us, and they may not be doing it in ways that we like. So in the end, this matters. I would call upon the
I hope
subcommittee
they're hearing
to
what this
think
guy's saying.
deeply about
He's just
passing
dropping
some
fact
sort of bill
bombs.
about stablecoins. We can't let perfect be the enemy of good when one of our enemies here is time. Right now, doing this right will bring financial inclusion through the dollar to billions of people globally. This is not just a U.S. concern, and it reinforces the strength of the dollar in the world.
Oh, yeah.
It will help us fund the deficit. Every dollar that goes into stablecoins ends up in traditional financial instruments that we can use to fund our government, like T-bills. It will bolster our reserve currency status, and it will ensure that if the blockchain continues to grow at the pace it has from 2012 to present, the standard of transaction on there for a currency is the dollar. Thank you very much.
Thank you, Mr. Campbell. Mr. Savinsky, you're now recognized for 5 minutes for your oral presentation.
Thank you, Chairman Hill and Ranking Member Lynch, Chairman McHenry and Ranking Member Waters, and members of the subcommittee for inviting me to testify today. My name is Jake Chervinsky, and I am Chief Policy Officer for the Blockchain Association, a nonprofit trade association dedicated to advancing good policy so that all the benefits of public blockchains can be realized here in the United States. The Blockchain Association includes over 100 leading US companies who are committed to responsible innovation, to advancing and strengthening the United States'
He's gonna use
strategic
20% of his
position
time
in global
on blockchain
finance and
center,
technology,
the Blockchain Association.
and to making financial services
Got it.
more
Got politics,
accessible
but-
to American consumers. My message for you today is simple. Congress must pass stablecoin legislation. Given the right policy, stablecoins can revolutionize the payment system and reinforce the dominance of the US dollar at a time when our foreign adversaries like China are seeking to undermine its status as the global reserve currency. In my time this morning, I want to give you 3 reasons why stablecoin legislation is so necessary. First, our financial system has a problem. It is stuck in the analog era of the last century, constrained by intermediaries who act as gatekeepers and middlemen to outdated infrastructure that has failed to keep pace with the digital age. Today, the global economy is on all the time. It is always connected, and yet our payment system is still slow, it is inefficient, unreliable, and inaccessible to many Americans. Now, public blockchains are the solution to that problem, a revolutionary upgrade on the technology that powers the global financial system.
They are
And
a
US
solution to that
dollar
problem. You know what else
stablecoins
is?
are one of
Communism.
their best applications, allowing
saying.
anyone with an internet
Anything
connection
is a solution if
to
you're
send
if you're
any number of dollars
you're foolish enough
to
to try it.
anywhere in the world, nearly instantly and at nearly zero cost. Stablecoins outperform legacy payment rails across the board. They are safer, they are faster, they are cheaper, they are more reliable, and they are accessible to everyone. Now, new legislation is necessary to maximize the benefits of stablecoins and also to protect consumers and to ensure that the financial system is safe and sound. Second, the status of the US dollar as the global reserve currency is under threat by foreign adversaries like China, which is pushing the digital yuan as a competitor to the dollar. The best way for us to maintain US dollar dominance worldwide is to spread stablecoins all over the world. Stablecoins are indeed best suited to perform that task.
They really are, actually. That's the thing.
Third, if Congress fails to act, we will not only forfeit a huge competitive advantage to our adversaries, we will also lose entrepreneurs and innovators to other more welcoming jurisdictions like Europe, the United Kingdom, Singapore, Japan, Australia, and many others that are far ahead of the United States in regulating digital assets. Make no mistake, regulatory uncertainty is already driving innovation overseas. Adopting stablecoin legislation now will send an important message to the job creators and the taxpayers in the US blockchain industry that they are
I
still
guarantee you there are
welcome
people that are in
here
that
at
room that are
home.
just giving him like a blank stare. Even though
Members
he's
of the
telling them
subcommittee,
straight up
stablecoin
that businesses are
legislation
already leaving.
has already received bipartisan, bicameral support. And the Financial Services Committee has already made great strides toward a balanced and effective bill. I urge you to continue that work on a bipartisan basis. And I, along with the Blockchain Association and all of our member companies, stand ready and willing to help. I appreciate the chance to testify today, and I look forward to your questions. Thank you.
Thank you very much. Mr. Desparta, you're now recognized for 5 minutes for your oral statement.
Chairman McHenry, Ranking Member Waters, Chairman Hill, Ranking Member Lynch, members of the Subcommittee on Digital Assets, Financial Technology, and Inclusion. It is my honor to submit my testimony to you today. My name is Dante Disparte, and I'm the Chief Strategy Officer and Head of Global Policy for Circle, a leading global financial technology firm and the issuer of USD Coin, or USDC.
I've got some
USDC
concerns
is a
about this
dollar digital
being
currency
theater right now.
supporting the
That Dante's
extensibility
up
of the
there
US
to
dollar in a competitive, always-on,
say what we already
internet-based
know, that
global
they're going to
economy.
favor Circle Group and USDC.
Indeed, as fears grow of de-dollarization or the rise of alternative payment
Not a hater,
systems that are
I just-
non-conversant with US values or
Just is
broader
what it
norms
is.
in the
That's what it looks like.
rules-based financial system, Circle, USDC, and dollar-denominated payment stablecoins can help to ensure the dollar remains the global currency of reference, including natively on the internet. Over the course of our 10 years of activity in the US and around the world, we have always aspired to a regulation-first approach based on trust, transparency, accountability, and financial integrity. It has been 5 years since the first USDC was issued, which for the purposes of this hearing and proposed legislation can be considered dollar-denominated payment stablecoin. Today, USDC has supported more than $10 trillion in cumulative transactions on the public internet. USDC-enabled wallets support a global payment network in more than 190 countries, which is akin to a mobile money network like M-Pesa, but at world scale. More than 75% of all USDC in circulation are held in digital wallets and smart contracts rather than on digital asset exchanges, suggesting a strong correlation as a dollar-denominated store of value. Indeed, there is a Cambrian explosion of use cases and responsible innovation courtesy of the programmable, composable, trusted, and open nature of USDC. Rather than disrupting traditional financial systems or markets, we are seeing growing acceptance of USDC as a dollar settlement option among major financial services firms, from Visa, MoneyGram, WorldPay, among many others. By every measure, courtesy of this early adoption of dollars as the currency of reference in digital assets markets, more than 132 billion of stablecoins in circulation reference the dollar, albeit to varying degrees of prudential regulatory standards. While some of these dollar-referenced stablecoins are starting to embrace sunlight and transparency, USDC was born in it. From the first issuance through to today, we have adopted macroprudential risk standards and transparency that is a hallmark of trust, even when compared to traditional financial services firms. As a result, a proliferation of enterprise use cases and adoption has followed. Enterprise use cases for USDC run the gamut, from treasury management to easing the exacting cost and slow speeds of cross-border payments, which remain stubbornly high, inconveniently slow, with little meaningful competition. Indeed, one of the partnerships we are proudest of, it shows the art of the possible with USDC and the advantages of open interoperable payment systems. Last year, Circle, together with the Stellar Development Foundation and MoneyGram, partnered with United Nations High Commissioner for Refugees, UNHCR, to enable USDC as a form of digital dollar cash assistance.
Yeah, I'm gonna turn the volume
supporting
down
war
here and
displaced
kind of speak
Ukrainian
over
refugees.
this representative from Circle. And it's nothing against Mr.
As
Disparte.
sole issuer of
It is, though,
USDC,
Vincent
Circle
brings
has
up a
always
great point.
operated
Why
under
is
the highest
USDC there? Why is
prevailing
Circle
regulatory
there?
standards for
They just had a
electronic
DPEG,
stored
had their
value
own
money
self-interest in
transmission in the
stables. Yeah,
US.
Circle being a
While other
stablecoin
countries
issuer.
regulate payments and electronic
Why
money
didn't they
activity at a
invite
national
anybody from
level,
Tether? Why didn't they
the
invite
US
anybody
framework empowers
from
state
Paxos?
banking and money transmission
Paxos Global to
supervisors
be able to
foster,
defend what they're
develop,
doing with
and
the
regulate the
USD.
payments industry at the state level.
This is a bad look.
Although this
Is this
somewhat
the only
Actually,
approach may
is
be
this the only
subject to
representative of
potential
any
operating and
stables there?
regulatory
Yep.
gaps,
There's nobody
it
else
has
representing an
nonetheless
actual
produced an
stablecoin interest.
economic
Everybody
development
else,
model
they
that has
function
enabled companies to start up and
as
scale across the US.
they function
Our
as
states are not only the
simply
laboratories
advocates,
of
right?
US
They're
democracy and
they're
crucibles for
advocacy
economic
groups or they're
development,
lobbyists.
they're
But
also the
here,
laboratories
I
of
mean,
payment services
to
innovation.
put somebody
Rather
with a
than framing
financial
financial
interest
innovation
into the
and
mix,
regulation as competing
right next to
forces,
lobbyists, what does
Circle's
it say?
operating
What does it
experience
communicate?
over the last decade
Everyone,
has
welcome to the
prioritized
circus.
public-private
Yeah,
regulatory
How do you like the
partnership
show?
and personhood.
yeah, it's pretty
In
bad.
short, financial
So,
innovation,
yeah,
inclusion, and
Vincent says,
protecting
thank
the
you.
integrity of the
Thanks for
financial
turning down that
system are not
campaign. My
competing
pleasure.
objectives.
I didn't think this would
Today,
turn
we
into
are
a show fest
comprehensively
for
licensed as a
Circle. And
state
again, I've
supervised
got
money
nothing against Mr.
transmission and
Disparte
electronic
personally
stored value
or
market
Circle Group
across
more
48
broadly. I think
states.
that there is a little bit of
We were
an
the
issue.
first company to receive a BIT
And
license from the New York State
but
Department
it's so
of Financial
painfully
Services
obvious
in
that
2015.
this has all been
We have
theater
been and
to
remain
then
a
make it
registered
seem
money
as though
services
Circle is
business,
most
conforming with
compliant with whatever
FinCEN's
the
guidance on
upcoming
combating
rules
illicit
will
financial
eventually
activity.
be.
The net result
And
is a
they're
company
discussing it in
that
the
went from a
open, and
mere
they're inviting
idea
them to
10
the
years
table
ago
to
to a
discuss
business
the
that
rules
has
that they're going to be
approximately
held by,
1,000 employees in
that
35
they're going to be held
states and
accountable
12
to.
countries.
but
both
they
strong
want to cut
prospects
out
and
half
desires to
of the
become a
market
US
cap of
listed
stablecoins
company.
that are issued. In fact,
Thank
there's
you
a
for the
higher
opportunity to
market
testify
cap
today.
in
I
Tether
look
and
forward
in
to addressing your
BUSD than in
discussions.
USDC. And when
Thank
you
you,
look at the
sir.
daily
Ms.
usage,
Riddle's
like the
hand, you're
actual
now
payment use
recognized for
case,
5 minutes for your oral
remittances and stuff,
presentation.
the other stablecoins dwarf
Thank you. Good morning,
Circle.
Chairman McHenry, Ranking Member Waters, Subcommittee Chairman Hill, Ranking Member Lynch, members of the subcommittee.
Oh, she's got to get close to
I'm
that
honored
mic.
to participate in this
Good grief.
important conversation about stablecoins and the need for legislation today. My name is Delicia Reynolds Hand, and I'm the Director of Financial Fairness at Consumer Reports, where I lead the organization's
Okay,
work
Delicia
to
Reynolds Hands,
evaluate
you need a
and rate
nickname.
digital
We're not going to
financial
nickname you
products and
These
services.
Hands.
Today, these products and services promise
We about to
all
catch
kinds
these
of
hands.
things: financial security, well-being, and even the ability to leverage new forms of asset classes without financial intermediaries with a simple swipe or click.
Barely hear
Whether
her.
these products and services live up to these promises is still an open question, but
She's
one
too
that
far
we
away from
aim
the
to
microphone, which
answer
means
through our
that the
product
noise
listing
gate
and
is not
consumer
picking her up.
research.
Whoever's running their audio can't
Cryptocurrencies
fix
can
her
be
audio because she's
appealing to
too far
everyday
away from the
consumers
GD mic.
whom traditional finance has never appropriately served. Our own 2022 Consumer Reports survey showed that African Americans
You can
want
hear
to
the
own
door closing in the
cryptocurrencies
background.
at a higher rate than other
There's too
ethnic
much room
groups.
tone because she's not close
These
enough to her
consumers
mic.
have never been a priority of the traditional finance and banking system. They continue to live, however, in credit and intergenerational wealth deserts. So there's a certain appeal to something outside the very financial system, which has largely ignored them. They're the targets of Super Bowl ads, influencers, and cryptocurrency kiosks.
Oh, we're gonna blame Shaq. We're gonna blame Shaq
But
now, huh?
consumers are caught in a vicious cycle of boom and bust of crypto experimentation. It is a public policy disaster that there are yet no uniform and meaningful regulatory frameworks in the US.
The FTC
These
has very
risks
clear
are
frameworks for
significant and
influencer
include an
marketing and
unlimited
influencer
supply of
promotions.
tokens and coins serving as collateral for loans, rigid self-executing smart contracts, non-existent reserve requirements, lack of interoperability requirements, lack of meaningful disclosures, and the creation of debtor-creditor relationships. We need to see common sense, consumer-first, comprehensive regulation. And the bill as posted, while it does have some positive things, does create some concern. The bill creates the potential for regulatory arbitrage. An important check on our banking system is even state-chartered institutions have to obtain federal approval. But this bill has no equivalent requirements for federal regulatory review, as the Federal Reserve Board or other regulators would have no authority to reject state licensing. Second, while the bill does import,
So I'm legitimately at the
does
mercy of
outline
the closed
an
captioning
important
right
role
now.
for
I can't
federal
hear her.
oversight
I
and
feel like I can
require
barely hear her
parent
words.
companies of bank subsidiaries authorized as stablecoin issuers to be insured depository institutions doesn't provide the same requirement for non-bank issuers. And allowing this will create confusion and less protection for consumers that choose to purchase stablecoins that do not offer such insurance. While the bill sets up a regime to approve issuers of
So
payment
stablecoin issuers have to offer
stablecoins,
insurance.
does
Excuse me, but could you mind bringing your microphone a little closer, please?
Sure.
Oh my gosh!
Apologies. While the bill sets up a regime to approve issuers of payment stablecoins, it doesn't outline how payment activities conducted
Can you
or
imagine having that on
facilitated by the
congressional record,
issuers
having
of
not
the
on House
coins
committee
will have
record?
adequate consumer
You
protections.
just couldn't speak into the
Consumers
friggin'
need to be
microphone.
able to prevent, cancel, replace, or override a transaction, and this is a critical function necessary to ensure payment system operators are able to conduct chargebacks or facilitate disputes over payments.
That is not a
Consumers
feature. That is a
come
bug.
to rely on interoperability, and additionally, they should have the same benefits in
You can do
stablecoin
second
payments,
layers. You
but
can
this bill
do,
does not
well, on second
require
layer payment layers. That's why we have things like
technology
Visa and
protocol,
MasterCard.
though
That's
the
why,
bill
I mean, do
calls
you
for
ever
the
wonder what
development of
Visa and MasterCard
standards.
do
This
between
may
yourself
still
and your debit?
impede consumer access and leave consumers walled off into each institution's
I feel like this person doesn't,
specific system. Related, we'd like to see additional language associated with custodial wallets. While custodial wallets may help consumers keep track of their keys, this has created a legal gray area that should be clarified. The law should prevent a debtor-creditor relationship from being formed, and this should be clearly required in the disclosures. There are additional consumer investor protections that we would like to see included or improved in the bill, such as moving from outdated notice and disclosures, prohibiting the commingling of funds, requiring a 24-hour
She's
calendar
still
day
not close
regime
enough to the
and
microphone.
sugar
How does
payment,
this person
and ensuring
do
a
what she
consumer's use
does
of
without
stablecoin
knowing
does not
how
create the
this works?
debtor-creditor relationship. Notably, we want to see all federal regulators have a clear and meaningful role in this space. I encourage committee members to continue to work together on a bipartisan basis, and I appreciate the ability to be here with you today.
Okay, I appreciate also
Thank you
that
very
her
much for your
stance is
testimony.
consumer
We'll now
protection.
turn
And,
to member
I was a little
questions. The
harsh or
chair
whatever, but like I
recognizes
think it's
himself
important
for
to have
5
that
minutes
voice in a
of
conversation
questions.
like this.
Currently, the SEC and the CFTC are taking contradictory positions in court
Right.
about whether one of the most utilized stable coins in the market is a security or a commodity. This creates an impossible situation for the private sector, for other regulators, stablecoin issuers who can't possibly comply with both securities and commodities laws at the same time. One of the main goals of our legislation is to resolve this regulatory uncertainty once and for all. Let me start with you, Mr. Disparte. Can you discuss the impact of that conflict?
Good grief. Why call him
Thank
Mr.
you, Chairman
Disparte?
Hill. Indeed, this, what I like to classify as sort of a regulatory Game of Thrones at the federal level isn't helpful. I think we saw that yesterday in the committee looking at
I mean,
securities
they're not
issues
even hiding.
alone. It
They're
isn't
not even
particularly
hiding. The very
helpful. There
first
is a
question they did for the
proliferation
open comment
of
session
digital
went to the
assets in
representative from
circulation.
Circle.
However,
They're not
virtually
even
every
hiding.
country in the
They're
world,
telling us straight up
of
that they
substance
favor
treats
these
payment
guys.
stablecoins under an equivalent national regime that would conform with electronic money rules, and as a payments and banking innovation, not a securities or commodities innovation. They might be used in digital asset trading, but their core function, particularly when treated as a payment stablecoin, is to solve the buyer's and spender's remorse that were one of the original sins, if you will, of the digital assets industry.
Thank you.
Original
Mr.
sins?
Campbell, in your view,
Okay,
should
now he's trying to justify the fact that
non-interest-bearing
USDC is going
payment
to start making
stablecoins
it
be
possible to
considered
do
security?
clawbacks for buyer's remorse. They're
No, I
they
would
want to be
echo
able to remotely
Dante's
burn
comments. These
your
fundamentally
USDC.
work like money. They operate like banking products. Unless you believe that something like JP Morgan's bank deposits or physical US dollars should be securities, then these should not be either. They should
Okay,
work that way.
that's helpful. Let me
Hey,
switch gears.
we
The
go.
current regulatory framework for stablecoins is mostly handled by state regulators and FinCEN. These state frameworks, New York being the most recognizable, provide critical consumer protections and regulatory oversight. As we seek to set up a federal framework, it's critical that we also retain multiple pathways for payment stablecoin issuers. This is an aspect of the proposal that I particularly want to make sure we get right. We had a version of that in the draft. So Superintendent Harris, would you describe what role you think state regulators currently should play in regulating payment stablecoin issuers?
Thank you so much, Mr. Chairman. I think the state regulators can play an incredibly important role. As you've seen in New York, we work very closely with FinCEN, among other federal regulators, but we have been able to nimbly respond to all changes in the marketplace, laying out a flexible licensing and charter regime, both through our BIT license and limited purpose trust, engaging in supervisory agreements with each of our licensed entities so that we can tailor our oversight to each of the risks that those entities present, examining on a regular basis and bringing enforcement actions when necessary. And as I noted in my testimony, everything that we do is based on banking supervision model. And I think it would be very helpful to see the dual regulatory framework that we use in banking duplicated for cryptocurrency and stablecoins as well.
Good. Thank you. And consumer protections at the forefront of what you do, and investors, right?
Absolutely. We
I thought
require.
Ms. Reynolds Hand made good points about making sure that's at the forefront of what we're doing, and you would echo that as a state regulator?
Absolutely. We require robust disclosures about fees and risks. We require one-to-one reserving and attestations. We don't allow lending of
Got
consumer
it. So
assets. We
Circle
require
Group is the
segregation,
preferred
all of which are
stablecoin
very
issuer,
important
and the
consumer
state of New York is
protections.
the
Thank you.
only place that's doing it right.
So Mr.
here.
Himes is
We're not
visiting
gonna have
with
any
our
crypto
subcommittee
business
today.
left
We're
by the
glad
end
to
of this
have
year.
you, Mr. Himes. And he and I have a bill called the 21st Century Dollar Act. The mission is to ask the Treasury to inform Congress about how to
Yep.
keep the
Call that
preeminence
provided
of
she's
the
a New
dollar,
York State
the
regulator.
dollar-based trading system in the world, which is integral to the economic success of the U.S. and has been a boon for countries all over the world in the past 8 decades. It's a positive thing, not a negative thing. And only people who think it's negative are people we're sanctioning. So you have to think about that for a little bit. We're not here to emulate whatever the surveillance state policies are of Iran or China. One of the benefits of creating regulatory certainty, in my view, in America is preserving this innovation in our country and preserving the US dollar status as the global reserve currency. Mr. Disparte, could you reflect on the role stablecoins can play in supporting US dollar dominance?
Thank you, Chairman. As I had mentioned in my testimony,
Why
cumulatively
is this
in
guy getting
5
so
years
many
alone,
softballs? Why
Circle's
do we keep on
USDC
lobbing
has
questions?
processed $10 trillion
Screw this guy.
of
Sorry, Mr.
internet-native
Sparta, I'm starting to
payments.
dislike you.
This is an
I'm
activity
starting to
that is not
dislike very
possible by
much.
any other
You're the
means
only
and
one being
any other
asked to speak.
transactions. Most of the world's payment systems labor under what is known as the walled garden problem. That would be the equivalent of a Gmail account not being able to send an email to a Hotmail account because the two systems are not conversant.
Thank you very much. If further thoughts from members on the panel, please respond in writing. And now I'd like to turn to my friend, the ranking member, for 5 minutes of questions.
Thank you, Mr. Chairman. Ms. Hand, the landscape of stablecoins has changed considerably in recent months. In particular, it's shrunk due to failure of some stablecoin issuers following the collapse of FTX, the crypto exchange. About 1 million customers lost all their money, totaling about $8.9 billion. All of this has revealed some
I'm going to
complex
name a large number.
risks associated with
And you know what?
stablecoins,
But we'll let
including their
FTX open
lack
back
of
up
stable
in
values.
Q2 with the $7.3 billion
Stablecoins are
they magically
unstable.
This is
found.
the guy
Obviously,
who mentions the demise
the
of Tether
exposure
earlier on in his
that some of
statement.
these non-bank
I've got this
products
doing delight on my face. I'm actually going to
expose
chew food because I want to be as
the
offensive as
banking
this guy is to
system.
me. I'm
I know
doing that.
that
I'm always have
there
a
have
smirk on
been,
my face because I know I'm getting paid no matter what.
warnings
Screw you
to the
guys.
banking system
Did
about
you pay your taxes?
the custody of stable coins and dealing with other cryptocurrencies, and also the vulnerability to runs that we've seen recently. Can you talk about some of the other risks that have been exposed in recent months? And could you also discuss the ways in which the current legislation that is tied to this hearing does not reflect those vulnerabilities and does not offer ways to address those new risks?
Certainly. Thank you for the question. So
Lady,
I think
get
one of the
closer to your
primary
mic. They already had to
risks
tell you.
has actually been brought up in testimony here today with reference to the growing acceptance of USDC by financial institutions. So despite recent instability and volatility that has impacted the fiat currency banking system, we continue to see industry, traditional financial industry invest. And this is at the
Stop
risk
saying,
of
get close to your
consumers.
mic.
What we need to see in a bill is clear activity limitations that reflect some of the issues that came up in recent months. We need to see limitations on commingling. That was an issue with FTX. We also need to see restrictions on self-dealing, undisclosed conflict of interest, and very explicitly for the consumers in Celsius who were not able to recover, we need to prevent a debtor-creditor relationship so that my coins are my coins and not those of the company. So those are some of the key risks that we see not addressed, among other things.
She started to get on a cadence of
I do
intentionally
want
saying,
to
at the
make
end
one
of every
correction in
single
what I
sentence.
said before. I think I talked about
We gotta get to
Tether's
practice
collapse.
more.
It's actually Terra, not Tether, that collapsed. Tether just dropped in
You know,
value.
I messed up because I have no idea what the hell I'm talking about,
So,
but, you know, just forgive me and I'll go
one
out
of the
and make
things I
rules for
worry
the rest of
about
you now. You
is
ready to
in
shut
this
up and let me
current
talk? Make
legislation
the rules?
being
Okay, let me do that.
proposed is that it would allow stablecoin issuers access to the Federal Reserve Services, the discount window. One of the saving graces of the FTX collapse and other subsequent collapses is that it wasn't tied to the traditional banking system, and so it was we had ring fenced the crypto industry. So
This is the problem.
all
This
those
is the problem when
losses
you're in a
were,
forum like
well,
this too.
most
When
of
you
those
start saying
losses
is that it's
were-
infectious. You get other
were
people saying it
occurring
too.
in the,
It's a really bad problem with public
crypto
speaking.
industry itself.
And I don't mean to
Did not infect
make light
the
of the
traditional
difficult
banking
job
system,
that
which is
in his
the envy
hands
of
has
the
to do.
world and provides
Just
so
winds up
much
creating an
power
fest.
to the U.S. dollar and provides a safe haven for much global investment. Can you discuss the risks that can come with allowing stablecoin issuers to act like banks without the
They're acting like banks.
regulatory
That's our job.
framework
Only the
that-
banks get
that,
to, only the banks
provides
get to be
protection
involved
to
in money laundering and
depositors
moving
and
huge amounts of funding
provides
to
integrity to
organized
our
crime.
entire system?
Certainly. I'll start with a historical point, which is the reason why we have the National Bank Act stem from a series of bank failures and systemic runs and a complete lack of federal oversight. So in the equivalent, here, we need that clarity. We cannot treat non-bank entities like banks without the equivalent restrictions to their access to consumers and not having substantive consumer protections in place.
My time has expired. I yield back.
My brain power is expired. I'll
The
yield
chair
back.
now recognizes the gentlewoman, the ranking member of the committee, for 5 minutes. I'm sorry, I got that backwards. Mr. Lucas of Oklahoma for 5 minutes, thanks.
Thank you, Mr. Chairman. I appreciate that.
A new voice.
I think it's helpful
new
as we
challenger,
work
I
through this
think.
process to do just a little bit of housekeeping on some of the definitions.
Hey,
Stablecoin attempts to provide a relatively stable value when pegging its value to real-world assets. Mr. Campbell, could you elaborate on the different categories of underlying assets that can back a stablecoin? And then specifically
Correct.
on the payment stablecoins in the legislation we're discussing today?
Yes, thank you very much. So if we look out in the wild, there's really 3 kinds of stablecoins that have existed. One I would call fiat-backed stablecoins. They kind of work the way you have in your mind, which is there's a pile of some sort of financial instruments behind them. The second is crypto-backed. This is people attempting to over-collateralize with things like Bitcoin or Ethereum. And then the last version is algorithmic, which are backed by some sort of mathematical relationship. I would tell you the first category has been largely successful. The second 2 are highly experimental financial products that probably should not be called stable. And I would say specifically within this bill, defining stable coins as the first category with good reserve guidelines and then consumer protections around what you are allowed to call a stable coin would be greatly helpful. Thank you.
Ms. Harris, you discussed the general approval process for a BIT license through the New York State Department of Financial Services and how DFS enters into supervisory agreements with companies based on their individual risks and business models. Could you elaborate a bit more on examples of specific risks presented by a firm that could be addressed in a supervisory agreement?
Absolutely. Thank you, sir. First, I want to note we have one licensing and one chartering regime in New York, so it gives companies the flexibility to choose a regime that matches their business model without sacrificing any regulatory rigor. Then once a firm has a license or a charter, as you noted, we engage in the negotiation of a supervisory agreement that allows us to tailor our oversight to risk. So imagine a company that wants to offer a coin on 2 different protocols. We can require separate disclosures, enhanced cybersecurity controls, enhanced BSA AML controls based on the risks that those protocols might present. We also have pre-approval for every new product or material change in business a licensee seeks to offer.
Okay, the
Mr.
mean-spirited.
Circle's USD coin fell below its $1 peg during the banking turmoil that stemmed from
Okay.
Silicon Valley Bank.
Let's see what
SVB
happens
was,
here.
of course, one of the banks that Circle used to manage cash reserves. And as we all know, the depositors stepped in to, regulators, I should say, stepped in to fully insure those deposits. Mr. Disparte,
Except the
could you
crypto deposit.
discuss the lessons learned from the collapse of SVB and what the potential impact of the SVB collapse was to USDC?
Thank you for the question, Congressman.
Jeez.
One, we learned a lot of lessons.
The fact that
First
he's
of
even
which
asking
is
him instead of just telling
that
him, hey, you
while
failed.
many of the policy
means that this is
conversations have
softball.
been about what risks could crypto and digital assets introduce to the traditional banking system and the traditional sector. What we learned with the failure of not one bank, but 3 successive bank failures consecutively over the course of several weeks was that we had to protect our business from risks in banking. One of those risks obviously could have been an existential level event for America's commercial banks, but for the federal intervention. And over the course of the weekend, Circle, like any other US regulated money transmitter, has a fiduciary obligation to redeem all USDC demands at par. We were able to make that promise on the Saturday after the bank failures began, closing the temporary DPEG of USDC from 88 cents to 98 cents. And then today, I think as we advocate for this legislation, one of the points that we could separate is payments activity from banking, because Circle, like any other company that relies on banks for payments, had an exposure, and that exposure was what happens with uninsured deposits inside the banking system.
Absolutely. I thank the witnesses for their observations, and with that, Mr. Chairman, I yield back.
Thank the gentleman from Oklahoma, and now the distinguished gentlewoman from California, the ranking member of the full committee, Mrs. Waters, for 5 minutes.
Thank you very much.
Away.
First of all, I want to understand.
Ask her how
um,
SBF is doing.
Superintendent Harris's
since they're so
presence here
chummy.
today. I'm a little bit surprised. I didn't know that you have a regulatory framework for stablecoins, do you?
Yes, ma'am, we do. Quite a robust one that exists both in regulation, in our supervisory agreements.
She's
and in
admitting
our
that she
recent
didn't know New
guidance
York
that we
already
issued.
had regulation.
Well, even though I agree with most of our panel that we should move very quickly to establish a stablecoin bill and get that legislation going, I agree with that. But since I have you here, Ms. Harris, I cannot help but ask you a few questions about the stablecoins that we are concerned about. Certainly are very important, but you just had a big bank failure in New York. And I want to take a moment or so to understand that what happened with one of the biggest bank failures in the country as it relates to cryptocurrency, if I may.
Absolutely, ma'am. It is a misnomer that the failure of Signature Bank was related to crypto. What we saw
Silicon
with
Valley Bank
Signature
failed
Bank
in that
is that
same
it had a
two-week
new-fashioned
period. The
bank
guy
run,
said
and the
it too.
outflow of deposits were from a broad depositor base, including wholesale food vendors, fiduciaries, trust accounts, law firms. And in fact, the outflow of crypto deposits were in exact proportion to their representation in the depositor base overall. And in fact, some of those deposit outflows were actually pre-planned. So it's, of course, unfortunate that there was a run on the
Yeah,
bank
mistaken
and
eggs,
that
my friend.
Signature prompted by
Mistaken
what we saw with SVB. But it is not the case that the failure of Signature was related to crypto.
Eat 'em while you got 'em.
Well, it was related to
Again,
crypto in that they were trying to take down
why
crypto.
is it understood or believed that it was certainly related to cryptocurrency? How do you absolutely excuse cryptocurrency from being a part of the problem of Signature that caused it to be in the situation that it was? It had to be closed down.
Yes, ma'am. I think it is part of what has transpired with social media and other things. It is true that Signature banked a healthy proportion of crypto customers. About 20% of its depositor base was crypto companies. They were known and had announced previously that they were de-risking from the crypto space. But again, with the run we saw on the bank that Friday evening, about 20% of the deposits left the bank, but 20% of that 20% was crypto. The rest were normal commercial customers with uninsured deposits that were leaving the bank. And so we did not see the collapse as a result of crypto deposits and their instability.
Yes, sir.
There was a
Regulators
broad
stepped in
base of
for Signature.
depositors that left the bank. The crypto depositors that left the bank were in exact proportion to their depositor base. And so it really was just a new fashion bank run prompted by what happened with SVB.
Well, there will be continued, as you know, discussion, and hearings, et cetera, investigations going on the issue.
She's made her eat
But
her
since
words
you
in the
do
most polite way I've
have
ever
a
heard.
regulatory regime here for the stablecoin, much of the concern that we have, learned about has to do with assets and whether or not they're credible and what can be called an asset and how can we be sure that we're going to protect the investors with assets that may not be real? What have you learned about that?
Well, we've learned a
Real?
great deal, and let me start by saying, in New
Tell me a
York,
little
we
bit
did
about the
not
Federal
license
Reserve
FTX. They
fiat.
could not do business
They
in New
don't.
York. The
They're
same is
not.
true
Yeah,
of
please
Voyager,
don't.
and the same is true of Celsius.
I get you.
They did not meet our standards, and so they could not operate in New York, even though they could operate in the rest of the country. We require our stablecoin issuers to back their stablecoins one-to-one with cash and cash equivalents. They have to provide redemption to their customers within 2 business days. They have to provide public and independent attestations of their reserve mix on their websites. And we have robust capital requirements based on a very sophisticated formula that we require our companies to have, which is why
It's
no New
very
York licensed
sophisticated.
entity has gone bankrupt.
Probably is.
And so what would you advise us, since we're still at the point of putting together legislation and hopefully working in a bipartisan way to do that? What advice can you give us about determining what is and what is not an asset, a real asset?
I think, ma'am, the framework that we've put together in New York is a very good model that has served well to protect New Yorkers, and I would urge the committee to do what it can to duplicate that and allow for a state pathway so that nimble regulators can continue to police the space appropriately.
Thank you very much. And there's another question, and
It's
I
right.
think I'll
She did kind of push
ask
for it there.
Ms. Reynolds.
I like her.
Good for her on that.
Mrs. Reynolds' hand. What do you
Big as
think, given
hands,
the
you,
implications of our national
Waters.
payment system, should we allow states to regulate payment stablecoins on their own? Does a federal agency like the Fed need a role to approve
Thanks,
payment
Waters, buddy.
stablecoins
Big
before they are
hands.
issued, in addition to regulating them and digital wallet providers?
Could you submit that answer in writing?
Yes, happy to do so.
Wow.
Gentlewoman's
you.
time has
Thank
expired.
you.
Gentleman recognizes Mr. Davidson, the vice chair of this subcommittee and the chair of the Housing and Insurance Subcommittee, for 5 minutes.
Thank you, Chairman. Thanks for our witnesses for being here today. I thank the
Character
staff on
face.
both sides of the aisle for all the work that's gone into getting to this point on stablecoin bill. And the market has been pleading for this
All
for
right.
a long time, except in New York.
This is one of our guys.
So the
Pro
New York
crypto.
regulators have been way ahead of the curve. I'm glad that more of my colleagues are learning. Not only is there a regulatory framework in place, but that it's essentially impossible for a stable coin to go to zero. And the reason is it's backed by level 1 high quality liquid assets, or in at least one case, physical custody of a commodity. Not a derivatives contract like a net asset value fund, but actual audited, physically present custody of a commodity. So Superintendent Harris,
Collateralized stablecoins really
you
are
know,
the way
you
forward.
regulate
and
those
nobody's
things. So
willing to admit it.
what would you say are the
They're
key
gonna
elements of the
even-
guidance that gives people confidence that a stable coin
Ian, what's the
really
name,
is
Anthony,
stable,
the guy who's been
and
speaking with some
backed by
sense, tried to
the
make it seem
full
as though
value, whether
collateral
that's a
stablecoins
dollar
are as risky
or,
as any
in the
algorithmic
case of a
stablecoin
commodity,
based
the
on
value of the commodity?
just pure
Thank you so
math.
much for your question, sir. They are
Not true?
precisely the elements that you mentioned. And I'll also note that in New York, we have not approved any algorithmically backed stable coins for issuance or listing in New York. But it is that one-to-one backing. It is our prohibition on commingling, rehypothecation, lending. It is our T+2 redemption, and it is our audit and reporting requirements, I think, that give consumers quite a bit of confidence in a New York regulated entity.
Just as a follow-up, when you look at the implications of that, I'm from Ohio. You know, we don't have an Ohio regulator that's doing what you're doing, but a federal framework for payment stablecoins would say, yeah, we
No.
could trust that the New York financial service regulators got this. At some level, we would have some federal supervision that would interact like we do in other
No, Ohio,
financial
grow a
services.
spine.
And
Grow a
that
spine
would be highly
and make
compatible
your own
with
state
your existing
regulations.
state-based regulatory framework.
Absolutely, sir.
Thank you very much for that clarification. Mr. Campbell, Tether is the largest stablecoin in the ecosystem, and it's headquartered in Hong Kong. What does that mean for the stablecoin ecosystem that Tether is located offshore? And you know, how has Tether become such a large player in the space?
Yeah, thank you for the question. I would say, one, Tether has become a large player because they had a first mover advantage. They started in 2014 before other stablecoins, and that just speaks to the problem of inaction. When people can't move elsewhere, you end up with entrenched incumbents. Two, Tether has
Tether
not
is an
faced the same
entrenched
kind of
incumbent.
regulatory
are.
uncertainty. They don't have the concerns that others do about having to conform with something relatively strict and relatively demanding like the NYDFS guidance, which by the way, I greatly support, having worked in that space as well. That keeps consumers safe. They're not transparent. It's unclear if they've always had all the reserves, and it puts people at risk. But when they are the default option because others are being hamstrung, it's what people use because there's demand for dollars on a blockchain. And so I think it's there just because it's been available.
Yeah, I think that's a big part of it. And thanks for your clarification. I guess I would say I've felt at times that because they don't have the transparency and disclosure requirements, I've at times referred to it as a time bomb because we have clarity in New York, but we don't have clarity into Hong Kong's market. And frankly, the move to
Tether
Hong
flood isn't
Kong
new though. People
is
have
a
been
step in the
screaming
right
Tether flood
direction.
for the better
Because for
part
a
of
while, it
6
wasn't
years.
even clear that they
Hasn't
were
closed yet.
accountable even in Hong
Didn't
Kong.
depeg when USDC did.
So, hopefully Tether's stable as purported to be, but I think the real opportunity for us
Your panelist had
is
a
for this
depegging event
body
from their stablecoin.
to create
Tether
legal
didn't.
clarity. And look, we hit Chairman Gensler pretty hard yesterday
Not enough.
on his failure at the SEC to provide clarity. But ultimately, we should be clear: the job to provide legal clarity at the federal level is right here in this body. And I just want to thank Chairman McHenry and when she was chairwoman, Maxine Waters, for paying attention to this space. The market really needs this legal clarity, and I think that's something that both of you have highlighted. But let me close with Mr. Chervinsky. If stablecoins are to eventually be used as an actual medium of exchange to move that store of value that is stable, do you believe it's necessary that they retain the attributes of cash, which is permissionless peer-to-peer transactions, versus an intermediary third party that facilitates the transactions?
Thank you for your question, Congressman. I think that's absolutely critical. I think that we are currently moving toward a cashless society, and we can go one of two directions. We can either follow China and have a currency that is totally controlled and surveilled by governments and also by corporations to serve a business model of surveillance capitalism, or we can reproduce the benefits of cash. I think we all agree that cash is a very important tool for people to use, and we can do that in the
But
digital space.
you'd have to
using
support
stablecoins.
zero knowledge.
I think for it to be
One of the
trusted,
benefits
it
of
has to
cash.
have those characteristics. My time's expired, and I yield.
Thank you, the gentleman for
Yeah, Vincent,
yielding.
unfortunately,
And
there
now
is no
my
one
friend
better
from
in that room.
Illinois, the distinguished
There are
ranking
better
member of
people
the
in the
Subcommittee
space,
on
better
Financial
advocates in the
Institutions,
space. They
Dr.
weren't
Foster,
invited.
for 5 minutes.
I guess I'll start with a question that I asked in a little more than a year ago when we had SBF and all the crypto luminaries in front of our committee. But I regard the foundational question on,
I like that he
on
brings that up
identity,
with the fact
which is
that,
if
yeah,
we wish
that
to
SBF
prevent
was
crypto
around.
assets from being used for ransomware and a long list of illicit activities, is there any alternative to having every crypto transaction traceable to the secure digital identity of issued by a country with which we have extradition treaties? Or is there any technological solution to that anyone is aware of? Or do we have to just say we cannot have self-custody, we can't have any of these, we can't have anonymous transactions? So is there anyone that believes there's a solution that prevents ransomware that doesn't violate that?
I'll take that, Congressman. I think that there will be those solutions, and I can tell
No,
you
that's not acceptable. You're talking about doing something right now. Right now, is there a technology that stops ransomware if we allow anonymous, self-custody on anonymous transactions?
there are many companies working on very important
And that do not have solutions that work. I understand there are many companies that are like, or anonymous Monero type collaborations that are trying to make the exact opposite happen. So that I think that everyone should watching this debate should understand that either you support continuation of ransomware and all that illicit stuff, or you don't. And it's a pretty much binary solution, a binary choice that we have to face. I believe that the people of the United States do not want to live in a world where anonymous transactions. Another example of this. Let's say that someone pulls
Mr. Foster, you are
puts a gun in your
incorrect.
head, drags you into an alley, says, "Get out your phone."
The central and retail
and
banks in the United
transfer
States
all of your digital
facilitate
assets to
tens
me.
of billions of dollars in illicit
Are
activity
you screwed or not?
in plain sight.
All right. In your
That's full
ideal
of crap.
world, are you in your utopia? What is your reaction to that?
So I will say, if you look at the models of existing stablecoins, including the Paxos stablecoins that I previously ran, we do have a solution to this problem, and I advocate for it in my testimony.
Oh, there you go.
Stablecoins that exist
So he
on
did help
public
with
blockchains should
BUSD.
have freeze and seize capabilities. If there's illicit action, we need the ability to take those coins back and prevent them from being spent. We also need blockchain surveillance tools, which Superintendent Harris talked about. They exist, Chainalysis, Elliptic, Inca Digital.
Yeah, but these
where
are
we can
being
identify
defeated,
bad
these are being
actors.
defeated by more anonymous coins all the time.
Only
Yes, they
when
are.
using crypto assets that are not the regulated stable.
All right, so that part of what your vision is that there be mandatory transparency so that ultimately regulators can see the true identities behind the participants in transactions.
That's one option. I would say the other is right now, given the lack of clarity and inability of many of the most regulated financial institutions to operate in this space, you have many bad actors. If you create a federal pathway where they use specifically regulated stablecoins that have these properties,
Right,
our
yeah.
interdiction.
So what ultimately what we need is the equivalent of a license plate on every digital wallet. Because if you think about how essential the development of
no, we
license
don't.
plates and driver's license were to the healthy development of the automobile industry, you know, this was crucial. It would be completely unacceptable to have unlicensed cars and unlicensed drivers driving through your neighborhood or across your international borders.
I know,
And so
imagine that.
what
That'd be
we
like
need
people
is
who jog in the
it
streets,
can be
clogging up the
anonymous,
streets just by,
like a license plate
going and
is
being
anonymous.
free and
Under
walking
most
wherever they
circumstances,
want
but you
to.
have that
Can you imagine
guarantee
this?
that when someone
Freedom
drives
of
through your
movement?
neighborhood,
People are
runs
really
over your
messy. They're
dog,
really hard to
that
control.
you can jot down the license plate, take it to a trusted court system, de-anonymize the owner of that car or that wallet, and haul them into court.
I would say, in fact, in the freeze and seize regimes for stable coins, you don't even need anything other than their license plate. I don't need to know who owns a wallet address to take the assets out of it. If somebody was hacked and all we know is the wallet address, you could take those assets back.
You have to know the private key associated with it.
No, you don't.
No, with the freeze
Oh,
and
if you
seize
have,
stablecoins, in
or
a
if you're
token
willing to,
standard,
okay.
we can take it back.
With some kind of governance superseding and overpowering the blockchain, in which case the blockchain doesn't rule. You have a trusted third party that can reverse transactions.
That is essentially correct in how the
These
centralized.
guys are
stablecoin
these guys are
works.
setting the
Let's-
stage
and
for
then
what is going to become
just-
a
All right,
collateralized
for the last
or
30 seconds
asset-backed
here.
stable
There's a whole bundle
dollar.
of
It won't
things
necessarily be a
associated
US
with
dollar.
rapid
They're
run
all
risk,
making the case for
fraudulent
why
minting,
custodial
implications on
systems
monetary
that have
policy, that
remote
all seem
freeze
like
and
they would
seize
be perfectly
capabilities and smart
addressed
contracts
with a simple
are going
rule
to go away.
that any stable coin that's issued has to be associated with an account at the Federal Reserve, and that no issuance is valid until it's accompanied by an attestation from the Fed that the total amount that's been issued is less than what's on reserve at the Fed. And a simple API that the Fed would provide, as well as a license, seems like it answers that whole bundle of things. Is there anyone,
Yes, the
if you
Fed
can
is
answer
the
for the record, if you see any problems with that simple rule? Among other things, it provides a business model for issuers because they get to collect the interest from the Fed.
Would invite the panel to respond to that good question in writing. Thank you, Mr. Foster. Now yield 5 minutes to the gentleman from South Carolina, Mr. Timmons.
Thank you, Mr. Chairman. Mr. Disparte, in the last few weeks, $6 billion has been transferred from
Mr.
USDC
Disparte,
to
I did
foreign
not receive
stablecoins.
my
That's $6
JP
billion left
Morgan
the U.S. economy.
kickback
That's
this
$6 billion
month. Can you look into
is
that,
no
please?
longer subject to the same U.S. AML KYC standards.
Make this guy
Could
famous.
you opine
Mr.
on this?
Timmons,
What do you believe
you
are
for
the
being a
reasons
shill.
for this mass exodus of U.S. funds? And do you believe it's due to lack of regulatory clarity? And what implications does that have for our national
He's got the
security?
duping delight on his face.
Thank you for
He
the
knows
question,
he's throwing this guy a soft
Congressman.
pitch, a
For
slow
one,
pitch.
I do think for a lot of users of these alternatives in the world, be it alternative payment systems, or in this case, Tether, opacity is the feature they're looking for the most. And that should not be conflated nor confused with the presumption of
That's
privacy
not actually
in financial services.
We need to make
whether
characters that sound
digital
like
or
Simpsons
analog.
characters.
But I do think
Really
there
easier to
is
make
a
them that
race
way.
to the bottom taking place in corners of this market segment. And
I do
candidly,
believe this race to
void
the
of
bottom taking
regulatory
place
clarity
in
the United States
we're
is
number
partly fueling that vacuum. And then there's also a geopolitical digital currency space race taking place around the world that I think more importantly and perhaps more kinetically in the short run
We are number
also manifests itself as a digital assets 5G wars. And so that just the same as there's certain companies you wouldn't
Digital
want
assets
building
5G
hardware
wars?
and software in your telecommunications infrastructure. I think there are certain firms in this industry that you wouldn't want building the financial plumbing of the future. And many of those firms are operating with impunity outside of the perimeter of major jurisdictions, including the United States.
Thank you for that. It seems the direct contradictions from regulators are just one of the many signs that show Congress needs to act. Many stablecoin projects are fleeing the United States for countries that have established clear frameworks for payment stablecoin
It's
issuance.
easy to kick back
The
this guy
longer
ever
the
made
U.S.
in his
goes without a
political
clear
career.
regulatory framework for stablecoins, the more this will accelerate.
Say something
Mr.
generic.
Travinsky, would you
Throw
describe what the
a
impact would
softball
be if
pitch over
legislation is
to
not
the
enacted?
circle group guy. Cool.
Thank you for your question.
I know it's a
I
big
think
allegation.
if Congress doesn't act, then stablecoins will be issued in
I'm
other
not saying that he's
countries.
definitely on
There
payroll.
is a
What
clear
I'm saying,
desire
he
for
could
this
be.
type of technology and for its application to national currencies. And there are many other jurisdictions that are adopting workable frameworks. And I think what that means is that the United States will not be able to ensure that stablecoin issuers are observing American principles. It also may mean that stablecoins will not be based on the US dollar to begin with. We'll see euro stablecoins in Europe and yen stablecoins in Japan. And that
You
will be a
think so?
hit to US dollar dominance and something that we should avoid.
Thank you. The draft legislation attached to this hearing would require stablecoin issuers to produce information such
Can you
as
imagine if
financial
dollars?
inclusion reports annually. Mr. Campbell, in your view, what is helpful to know about a stablecoin issuer? Would you consider financial inclusion reporting as materially important enough to be statutorily required?
Well, thank you for the question. I would start by saying I primarily think of these as banking products, which means the first thing I think about is safety and soundness. When I think about stablecoins, number one on the list when you think about transparency is transparency of reserve assets, composition of reserve assets, and giving everybody from a financial inclusion perspective the faith that they can use this instrument. And it's backed by things like cash at US banks that is insured. It's backed by T-bills. It's backed by the correct forms of assets. Then where you end up with from an inclusion standpoint is regardless of reporting at very low cost with very low friction, every American and others can use this product.
Thank you for that. Mr. Chairman, I yield back.
Gentleman from South Carolina yields back.
Yeah,
The
Vincent,
gentleman
you
from
missed
New York
one
is now
thing.
recognized
They
for
also
5 minutes.
want
Mr.
the
Torres.
custodians to deposit in New York.
Thank
but
you.
they also want
Superintendent
New York
Harris,
to
I said
serve as
to
the
you
framework for the
privately and
federal
will reiterate
legislation.
publicly that I will not support any stablecoin legislation that preempts the New York State Department of Financial Services or otherwise encroaches on the sovereignty of New York State. As a New Yorker, that is a red line for me. When it comes to finance, there's a long tradition of dual regulation. Just like banking has both a federal option and a state option, stablecoin issuance should have both a federal option and a state option. And a state option
We're
should
actually
exist
talking
not only on
about here.
paper, but in practice. The federal government should certainly have a floor that prevents regulatory arbitrage, to be sure, but there's no need for a ceiling that preempts either in theory or in practice. Does the proposed legislation before us create a genuine system of dual regulation?
Thank you so much, Congressman. It's been such a pleasure to get to know you and work with you since taking this role, so I appreciate your partnership. I think there are improvements that could certainly be made to the present legislation. Although it has language that states nothing in the legislation will preempt states in practice, I think there are a number of provisions that give federal regulators veto authority over state regulators and their judgments and oversights that would be counterproductive and provide a disincentive for companies to take a state path.
So we're not quite there yet.
Not quite yet.
Do you agree that stablecoin issuers should be fully reserved and that those reserves should consist of 100% cash or cash equivalents?
Absolutely, and that's what we do in New York.
And do you agree that those stablecoin reserves should be verified not only by self-attestation, but also by a third-party audit?
Yep, and that's what we do in New York.
You know, common sense dictates that you cannot have an honor system
Third-party
which
audit,
a
sure, but
charlatan like
only
Sam
six ones?
Bankman-Fried
Only,
claims to be fully reserved, and then the
only,
regulators take
only
his
dollar
word for it.
reserves?
Exactly.
The PWG report proposes banking regulation for stablecoin issuers. But since a stablecoin issuer has no fractionalization of reserves and no lending function like a bank, it would seem to me that a stablecoin issuer operates differently from a bank and therefore should be regulated differently. Mr. Shavinsky, do you agree with that analysis?
I completely agree, and I think that we can design reasonable, tailored regulations for non-bank entities to issue stablecoins in a way that is just as safe and sound as a bank doing the same.
SEC Chair Gary Gensler asserts that an alternate regulatory framework for crypto would, quote, undermine 90 years of securities law. Since American federalism has 50 laboratories of democracy, we can actually test that thesis, that hypothesis against the regulatory experience of one of those laboratories, New York State. So in New York State, crypto regulation is segregated from securities regulation. The New York State Department of Financial Services regulates crypto, whereas the New York State Attorney General regulates securities. So has the Gensler hypothesis been proven right or wrong in New York? Has a separate regulatory framework for crypto undercut securities regulation?
So what I would say is our authorities do not depend on definitions about what is a security, what is a commodity, what is a currency. At DFS, we have blanket authority over virtual assets, and we exercise it accordingly. Some of our companies are also subject to registration requirements with the AG, and I think what we've done in New York has proved quite successful for some of the reasons we've discussed today.
So has a separate licensing regime for crypto come at the expense of regulatory rigor?
No, not at all. To the contrary.
In fact, New York State DFS is the most rigorous regulator of crypto in the country.
And I would say in the world.
In fact, what state was the first state to raise red flags about the insufficient reserves of Tether? It was not the SEC. It was not the CFTC. It was the state of New
Yeah,
York.
but then it started doing attestations.
And so the notion that a separate regulatory framework for crypto would undermine 90 years of securities law has been
We're
definitively
really going to flood
disproven
Tether, but then
in
also
New York State.
and then not mention that Tether did pass muster in New York.
The legacy financial system has high
You
fees
can't
and
have it
long
both
delays that prey upon the lowest
And I'm not like
income
some Tether
Americans.
maxi.
Poor people of color
Like that's a
have
silly
to
thing.
pay predatory fees in order to transfer their own money to loved ones abroad. Stablecoin has the ability to function as a currency, and blockchain has the ability to move money from peer to peer in real time. Mr. Campbell, is it fair to say that the combination of those two technologies have the potential to create a better, cheaper, and faster payment system? That question's for Mr. Campbell and Mr. Disparte.
I thank you for the question, and I would say yes, unequivocally. The beauty of a blockchain is it treats everybody the same. If you have low fees, high transparency, high ability to transact, everybody can use it regardless of the amount of money they have, and I think that is one of the best features of this new technological innovation.
Unequivocally.
Short and sweet. I yield back.
Gentleman from New York yields back. The gentlewoman, Ms. Houchins, recognized for 5 minutes.
Thank you, Chairman Hill and Ranking Member Lynch. Thank you to the witnesses for your
Look at how
testimony
few
and
seats
for
are
speaking
actually
with us
filled for
today.
this session.
As I highlighted yesterday in our hearing with SEC Chair Gensler, I'm concerned about the lack of regulatory
How many people are supposed to be in that chamber?
clarity from agencies and the restrictive, overly burdensome approach that many of our federal regulators are taking with the digital assets ecosystem. The constant threat of regulation by enforcement has done nothing to help businesses and innovators here in the U.S. Instead, this unclear approach by the federal agencies has only served to push innovators elsewhere. Mr. Disparte, Circle just announced it's opening its European headquarters in Paris. What does the regulatory environment for stablecoins look like in the EU?
Thank you for the question, Congresswoman. The European Union, since 2019, has embarked on a whole of region, whole of economy framework for digital assets known as the Markets and Crypto Assets Framework.
The EU.
Originally, this was in response to fears of big tech and at some level fears of China tech or geopolitical competition and technology. But today, that framework has evolved into perhaps the world's most comprehensive framework for digital assets, that including the topic of money tokens and would passport those licenses across the European Union. Circle has just announced the submission of 2 licenses in Europe, in Paris, and France is the venue of choice. One is an electronic money license, and the second is a digital asset service provider license. And the 2 of them would allow for all of the activity that we support here to be effectively exported to Europe. I should add, we've also filed for a similar license in Singapore as a major payments institution.
So how does it compare to the draft proposal from the 117th Congress that is attached to this hearing?
Well, on the one hand, it is a much broader framework. And so the European framework, MiCA, Markets and Crypto Assets Frameworks, contemplates broader activities than payment stablecoins. It contemplates digital asset tradings, which types of assets would be systemic, definitional issues around market conduct, and so on. But it does have many aspects that would be comparable. For example, the requirement of prudential treatment of stablecoin reserves, segregation of funds.
Yeah, I'm sorry, I'm making 0 ad revenue from televising this USDC ad.
And
They
to
haven't
be clear,
even-
the EU
they
is
haven't
not
even
the
offered to
only
make it back.
foreign political entity that's moving on this issue. Mr. Campbell, Mr. Disparte, could you shed some light on what other countries' regulatory frameworks for stablecoins look like and what the frameworks require of issuers? I'm looking at what are the implications of the United States not being the first mover in this space, and how has that impacted the current dynamics of the overall ecosystem?
Well, thank you for that question. I would say if you look around the world, you're starting to see legislation that deals specifically with fiat-backed stablecoins. So nobody's really embracing crypto-backed, nobody's really embracing algorithmic, but places like Singapore, like Dubai, like Abu Dhabi, like the UK, who's now working on a framework, like the European Union, all have frameworks that I would say are substantially similar to what has been proposed in the 117th Congress bill. I think we can do better in America. Our financial regulation and systems are more robust than some of those places. But in general, if we don't act, those are the best options and people will take advantage of them. Thank you.
And for my part, I don't subscribe to the view that it's a zero-sum proposition. I do
it's
think the
not
stakes are
zero-sum.
increasingly higher and there's more choices in terms of jurisdictions and venues, but it should be made clear, a Circle and a company like Circle probably wouldn't have been started successfully in any
Hold
other
on, I
country
had
around
something
the
I wanted
world.
to say.
The fact that we're now a net exporter of our operating model and business model does require, I think, that the U.S. pay attention to these alternative jurisdictions. There are other places as well. Japan, later in June, will issue broad, comprehensive stablecoin guidance. Hong Kong has come back online in a broad way. But the innovation ultimately will conform, I think, with all of the rules that we could set forth in this committee. And I do think it's really critical that the path for digital assets is increasingly shaped by city-states as opposed to nation-states. And we see that, of course, with New York, Singapore, Hong Kong, and many other jurisdictions around the world.
Thank you. Without proper action, I certainly fear the U.S. could lose its leading role in digital assets. Many stablecoin projects are fleeing the United States for countries that have established clear frameworks for payment stablecoin issuance. Without guidance, I think this problem will only worsen. As a member of the subcommittee, I'm certainly excited to tackle these important issues to make sure that we get it right here in the United States. And I yield back, Mr. Chairman.
Gentleman yields back and now recognize the ranking member of the Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
Ooh.
There's a lot of money in crypto and crypto adjacent space. The crypto world makes money by literally making money.
The Federal Reserve
They
is
had it
so
up to 3
different.
trillion. It's dropped down to 1.2 trillion, but 1.2 trillion out of thin air pays for a lot of lobbyists and a lot of propaganda.
Yeah, a lot of
In my city, the Lakers play at
likes
Crypto
propaganda
Arena.
the
They
way
do
we
not
get.
play at Know Your Customer Arena.
Oh, crap.
They do not play at Enforce Our Tax Laws Arena. They do not play at Prevent Drug Dealers from being able to get their
Whoa, he
financial
actually goes there.
transactions handled
He did.
arena.
How many more comments before he
We
brings up Derek?
have a very good payment system. We have an excellent currency. The entire world tends to like the
They
dollar. It's
love
a
our
good store of
currency
value, good
until, of
measure of
course,
value,
they stopped using it
good
for
means of
anything because they hate
transaction.
us.
Our payment system, you got Apple Pay, comes right out of your checking account. It's not as good as what the crypto world promises they'll deliver in some future decade, but it's way better than what the crypto world delivers now. And I am sure that payment systems using the dollar will get better. So what is the problem? The problem is it's damn hard to cheat on your taxes, and it's damn hard to run a drug sales operation with the US dollar, because we've got Know Your Customer and we've got anti-money laundering.
Your
and we
colleagues
need a
cheat on their
payment
taxes all the
system that
time.
meets the
In
needs of
addition
the
to taking
millions of
bribes.
Americans,
Obvious, open
or at
bribes.
least the hundreds of
With their net
thousands
worth
of
increasing
Americans
by
who
millions
want to
for no good
engage
reason.
in major illegal activity. And
This guy makes me ashamed to be a
God.
Californian.
other countries
Californians. Our
are
tax
moving
dollars do
forward
not
with
go to
this, and we got to
Californians.
catch
They're
up with
Not
them.
anymore, they don't.
Peru's ahead of us in cocaine manufacture, in cocaine cultivation. China's ahead of us in organ harvesting, and it's time for America to catch up.
The hell?
Land of fruits and nuts,
Last,
people. Land
I
of
can
fruits
barely
and nuts.
read Ms. Hood, if I can see that far. If we allow every state to have its own rules, and say a state like Wyoming, which doesn't have that many people, and
You are a state
cows
representative
don't always sell for as much as you'd
trying to
like.
talk about why
If
states
they
should
could
have
make $1
rights.
billion by just having a regulatory system that was perfect for tax evaders, what would stop them?
Can this man be recalled? How do we fire this person?
Thank you. Currently, nothing would
What an
stop
absolute
them,
joke.
because there is no overarching equivalent federal regulatory framework, and we would continue to see a race to the bottom, which is not good for
Yes.
innovation.
What for the payment system needs is regulation so that you can be sure that while you're hiding your money from the IRS, and that's the big market for this. I mean, drugs are important, sanctions evasion is important, but the IRS has testified that there's nearly $1 trillion of unpaid taxes every year, almost exclusively from the very wealthy. And in order to not pay $1 trillion in taxes, you need to hide $1 trillion of income, which means over a decade, you have to hide $30 trillion of assets. That is a huge,
He's really
a huge market.
trying to pin all this on
And,
crypto.
I
$1
think
trillion
could be
in
more important
taxes
to Wyoming
in
than
fiat-denominated taxes are
cows.
missing,
And of
that's
course, it
entirely
all
the
goes
problem with
away
cryptocurrency.
if your payment system has know your customer and anti-money laundering provisions.
Wait, hold on, I had something for this.
So, a stable coin, talk about an oxymoron. The problem for those who want to use the system is that it's so completely unregulated that they might find that their money in the Bahamas isn't there anymore. So they need regulation to protect those who put their money in, while at the same time, we don't have know your customer and anti-money laundering. And that is something that I think the state of Wyoming or anyone else trying to provide this service will make sure that there's actually reserves behind the coin. But at the same time, the IRS can't find out who owns the coins. So, every day, drug dealers get cheated because they try to buy a kilo and the scale is deliberately cheated against them.
What
They
the
need
hell is this guy
regulation too.
talking about?
And
Mr. Sherman, you're
a
very
fair
familiar with how
system to
drugs
have a
are bought and
concealed
sold.
currency is
How
what
how
cryptocurrency
did
is
you
all about.
learn
I yield
so
back.
much?
The gentleman yields
Career.
back. And now the gentleman, Mr. Flood, is recognized for 5 minutes.
Thank you, Mr. Chairman. I appreciate all the witnesses' time and testimony today. As someone who passed the Nebraska Financial Innovation Act.
Well, Assessor,
allows
I don't even
state charter
know what
banks
it would take
custody
to
digital
unelect this
assets in
person.
my home state. I'm really interested in the pathway for states and appreciate Superintendent Harris, you being here today and your testimony. As we think about legislation, can you describe why maintaining a robust role for state regulators is important?
Absolutely, sir, and thank you for your question. I think we see the success of the dual regulatory framework on the banking side, and it's something that we should seek to duplicate when it comes to stable coins. I think the main virtue is the nimbleness with which state regulators can act, and you see that evidenced in New York with our one-to-one reserving requirements. All the things we've talked about here today are already in place in New York because we can move more quickly and stay abreast of developments in the space.
In your position, can you tell me other states that you think are at the forefront of stable coins and understanding this space, and state regulators that have
Man is clutching his pearls.
maybe
Literally.
taken some steps to be more innovative?
So Illinois has recently announced that they are going to take the New York framework and duplicate it in Illinois. I
Illinois
understand
to
that's
you,
the case
Miss
for
New
a
York
number of other
and
states that
Culture
are
Shine.
exploring that as well.
Thank you. It's important that the pathway to becoming a stablecoin issuer remains open for new entrants. And I want to just take a second, Mr. Disparte, do you view the current path for non-banks in the current draft legislation attached to this hearing as achieving this goal?
Thank you for the question, Congressman. I do think it is really critical. The United States of America is an outlier among the advanced economies in the world in not having a federal payment system charter. The best alternative we have, if companies like PayPal and Stripe and Apple Pay and all these other services can exist, is state oversight. And I do think it's really critical that
Thank
a
you for sharing that
circle
link.
enjoys competition in the future, where a comparably regulated and structured stablecoin might exist, also referencing the dollar. The real next breakthrough is fungibility and interoperability of those payment systems as well. And so preserving a bank and non-bank pathway for digital currency issuance in the country is going to be really critical.
So you
One
need
of
to make
the
sure that we are
issues that I've dealt with in
grandfathered into
Nebraska
whatever the
is that
CBDC is
we
that you
oftentimes
create.
don't really
That's already the
appreciate, I
plan,
think
but
consumers
I
don't
just want to say
appreciate
here,
that the
in
word
some
bank
sly way, that's
comes
what we
with
need.
level of security that you can't get in a lot of countries around the world. Allowing non-bank entities access to the federal payment system is a big step for Congress. It's a big step for this process. It comes with it FDIC oversight, the Federal Reserve. Can you respond to the concerns that someone might have about allowing an entrant into the federal payment system? And how do we weigh whether or not we do it with a non-bank entity, which I really think is an open question. I'm concerned about it. I'd like to know your thoughts.
Again, here too, if you want to really understand the competitiveness gap the United States faces, the inability for the Central Bank of the United States, the Federal Reserve Board, to provision federal services to non-bank actors is an enormous gap. Again, we're an outlier compared to the United Kingdom, Europe, Singapore, many other countries around the world. And
We are an
indeed,
outlier, but not in a good
the
way.
digital currency space race analogy is precisely that. There's 114 central banks around the world representing 95% of global GDP, developing solutions around this digital currency question. And that could include the provision of central bank custody for cash reserves. We're on the cusp of launching FedNow in the United States. If FedNow is going to work, FedNow has to be provisioned to non-bank actors. The banks, I hate to say it, have no incentive in competing past fee interest incomes, right? To be banked is expensive in this country. To use basic payment services is expensive in this country. And we exact the highest fees from the people who could afford it the least for very basic services. Those services, I might add, also enjoy a public backstop. The last time we socialized, losses to trillions of dollars was in bailing out the very banking system. We just saw 3 of them bailed out recently.
Okay,
And so
actually, you make
payments
valid
competition
points
is
here.
critical. Legitimizing it at the federal level would merely level the playing field between the United States and other countries.
Do you think that non-bank entities then would also welcome all of the steps that we require, like federal FDIC insurance, the exams? I mean, one of my concerns, and I think it's an honest concern, is if we let non-bank entities enjoy the benefits of banks, that could make it difficult. I think we can't have a collapse. We can't have a calamity.
No, we
can't
can't.
miss.
We can
for
have
the
a
American
collapse.
consumer. Thank you.
You didn't
Yield
allow
back.
for collapse to happen after
Thank you, gentleman from
2008.
Nebraska. Now calling the gentleman from
And now we're
Illinois,
paying the
Mr.
price.
Caston, for 5 minutes.
Thank you, Mr. Hill. Thanks to all our witnesses. Mr. Disparte, I want to start with you when Mr. Lucas asked you what lessons you learned from this period on March 10th when, that essentially broke the buck, if you will, on stablecoin. And you had mentioned that, I think you said you were exposed to some risks in the banking sector. I want to challenge you a bit on that because there were no money market funds that broke the buck and they were just as exposed to the banking sector. First question is, do I have it right that you had about 40 billion in cash deposits on March 9th, of which 3.3 billion was at SVB? Is that right?
That's correct.
Okay. Have you since that point taken any efforts to increase your dollar holdings, diversify your dollar? I mean, what have you done to protect against the fact that you did have exposure to a part of the banking sector, but not to the majority of your dollar holdings?
Yeah, thank you for the question, Congressman. The Circle, prior to the failure of
talks like
Silicon
more
Valley
about it
Bank,
when he'd ask something that's a difficult question.
continues to operate
Um,
what we think of as the safest dollar settlement infrastructure on the internet. USDC's entire composition.
And just like, I don't want to be rude. I don't want to get into a whole pitch for like Circle. I'm just trying to understand if you take measures to increase the diversity or liquidity of your dollar holdings.
Sure. Today, the cash component of USDC is held at a large cash custodian, New York bank. And the remainder, typically 80% of USDC is short-dated US Treasuries.
Yes.
Okay.
Of 90 days or less.
Okay. And what was the volume was there a significant volume of loss on the trading during that period before you got back to the dollar peg?
Well, yes, USDC lost about $10 billion of circulation, but we think of it as fulfilling the right that the coin holder has of redemption at par for a US dollar, even in a situation of extreme stress in the banking system. The 3 banks that failed had connectivity to the digital assets industry, although their failure wasn't caused by the industry.
Understood. So I asked that question, and now I just want to put a question to all of you. And I was going to ask you to all be New Yorkers in 1975, but then I realized some of you may be conflicted out from that question. So let me ask instead that you were all Michiganders in 2013. The largest city in your state's about to go bankrupt. You were all the treasurer of Michigan. Would you support legislation that would allow states to print paper money issued by the state of Michigan with a peg to the US dollar without any approval from the Fed that would allow you to print your way out of the bankruptcy of Detroit? Would any of you support that legislation, or would that feel like moral hazard to you?
So I'll answer that one and say, one, no, you shouldn't be having unbacked instruments, but two,
They're backed. They're backed by the Fed. We're going to mandate that the Fed has to fully back that Michigan dollar.
So I would say, I think the model you should think about in this context is things like prepaid cards or money market funds, which you referenced, so no.
I'm just asking, should you be able to print, as we did before
Local
the Civil
currency
War,
is
just have
prohibited
states
under
print
international law.
currency, but then say that the federal government is going to backstop that currency? I mean, it feels like a big moral hazard to me, right? I mean, you would create a bunch of, now, the reason I ask that is because Section 103 of the draft legislation says that a stable coin issuer could ask for approval from a state. That state would then could then choose to accept that, and the Federal Reserve would have to approve that within 60 days. The Fed would have no backstop. So you could have a situation, I mean, look, it's currency, right? You could have a situation under Section 103 of this rule where if I am a state, if I'm New York in 1975, if I'm Michigan, or if I'm the next state that's facing a fiscal crisis, I can just say, can somebody please issue a stable coin so that I can back my way through this and dump all the risk on the American taxpayer?
Yeah, I would say that is the value of the reserve guidelines that are also within this bill, is that to create a stable.
That's kind of already
but I'm asking, should the Fed not have the right, if we are going to give the Fed the obligation to backstop that risk?
QE is already.
And the reason I framed this by starting about the circle question is money market funds did not blow up because for better or for worse, there's a Fed backstop. Ms. Head, with the time I have remaining, do you have any thoughts on how
They're all
we
like,
improve this
you are
legislation
actually
to
too dumb
remove
to
the moral
answer.
hazard?
You're giving him the silent treatment.
Absolutely. We need that clear.
Paul asks who would
backstop,
accept
and
Michigan
the
bucks?
Federal
I mean,
Reserve,
clearly
minimally
this guy would.
has to have the ability to reject applications that don't come up to par.
Okay, well, I would hope at a minimum we can improve this legislation by making sure that if we're
the
going to
Fed
put
has
that
control.
obligation on our federal government, the federal government should have some
not liking this
authority
answer.
to say whether or not
I'm
they're
not liking
willing to
responses
accept.
very
Thank
much.
you. Yield back.
I thank the gentleman. Yield to Mr. Nickel for 5 minutes.
Thank you. Thank you all for being here today. I share the same concerns as ranking members Water and Lynch and agree that we need to ensure robust consumer protections when it comes to digital assets. I also want to thank Chairman Hill for holding today's hearing, and I look forward to working on bipartisan stablecoin legislation. After our committee's hearing with SEC Chair Gensler yesterday, it's still evident that there's a lack of clarity in regulation impacting the digital assets industry. Without clear rules of the road, this innovative technology could head overseas where we can't protect investors. I'm committed to working in a bipartisan way.
We can't even protect our own interests out there, not even with men who have guns.
Mr. Travinsky, how would
Think of the
effective
children.
stablecoin legislation bring more clarity to the way digital assets are regulated?
Thank you for the question, Congressman.
And also, can I borrow 50 bucks?
Stablecoin legislation would bring clarity in 2 ways. One, specifically, it would provide clear rules of the road for stablecoin issuers as to how they can set up their businesses and put these products into market here in the United States, subject to American principles. And so that, as Congressman Foster asked earlier, they would be required to freeze assets if it were required in order to keep illicit actors and other bad actors out of the crypto ecosystem. I think that's very important. But secondly, it would also send a message that the United States is open for business to this technology. That's not the message that the industry has been receiving from many other regulators so far, who have been substituting their own judgment about the value of digital assets for Congress's judgment. But indeed, it is Congress's role to answer the major question of how digital assets should be regulated. And I think that Congress should begin with stablecoin legislation.
Thank you. Mr. Disparte, next to you. I understand that the U.S. has an opportunity with stablecoins to reinforce the dominance of the U.S. dollar as the
And
global
especially
reserve
USDC.
currency. This comes at a time when the status of the dollar is under threat by foreign adversaries like China and Russia. Mr. Disparte, can you provide some examples of how stablecoins have improved cross-border transactions and empowered those living in economically disadvantaged countries? And can you please explain how stablecoins may enable individuals and businesses across the globe to transact in US dollars?
Thank you for the question, Congressman. One of the most powerful examples
Thank you for
is a
the,
very recent one,
the slow pitch, Congressman.
which is
I was
our
getting kind of
partnership
nervous
with
last time.
the United Nations High Commissioner for Refugees, UNHCR. Circle, together with Stellar and MoneyGram, as I shared in my written testimony, helped design a sort of digital cash assistance program for Ukrainian refugees. This program worked in a manner that no other alternative payment system could have supported, which is that if you think of the way we as a country move foreign aid today or disaster assistance, it's pallets of physical cash, which are literal honeypots for corruption, bribery, and fraud. The idea that you have device-centric money that is corruption-resistant, near instant, and auditable is a very powerful feature. And the stablecoin, a dollar-denominated stablecoin, in this case USDC, is the payload that supports that innovation.
Thank you. Public blockchains offer a revolutionary solution to our current financial system. Public blockchains can be accessed by anyone in the world who has an internet connection and are faster, less expensive, more reliable, and more transparent than legacy payment rails. But as we have seen, the value of various cryptocurrencies is volatile when compared to many currencies, especially the US dollar. Mr. Chervinsky, how do stablecoins differ?
Stablecoins combine the best of both worlds of the traditional financial system and public blockchains. They take the benefits of the public blockchain, efficiency, security, reliability, and accessibility, and then combine that with stable value. Now, many other types of digital assets, like cryptocurrencies, are volatile against the US dollar. Now, that's not to say there aren't great reasons why people should use those assets for any number of purposes in a decentralized environment.
When are you going to start
But
talking
for
about
the purpose of
privacy?
payments, it's best to
Boy,
have
what
an
you
asset
won't.
that is stable against a national currency so that it can be used to exchange for goods and services without worrying that tomorrow the price of what you bought yesterday is going to be way higher or way lower. So with stablecoins, we get all the benefits of the technology without that issue of volatility.
Thank you so much. Yield back.
Gentleman yields back. I want to thank our witnesses for being an excellent panel today. I thought the conversation was very helpful to clarifying the direction to take on stablecoin legislation. I certainly have heard unanimity from the panel that a regulatory framework designed by Congress is something that would benefit the U.S. economy and U.S. investors and consumers.
Section 106 is the one that
Without
concerns me most.
objection,
They
all
didn't really
members
do
will
a
have
deep dive
5
on that.
legislative days within which to submit additional written questions for the
Thankfully,
witnesses
and luckily for you,
to the
I
chair,
did.
which will be forwarded to each witness
Talk
for
more
their
about that another time.
response. I ask our witnesses to please respond as promptly as you are able. This hearing is adjourned.
Dang, that was abrupt. Okay, so key takeaways from that session. Let's talk about this. So, yeah, section 106. That is, we've got the audio going in the background, and it's funny, their mics are still open. I don't know why you would do that, right? Leave your mic open when you're just about to leave from the
Somebody
session.
wants to grab a hot mic take.
Right? That was unreal. Paul D says, I like Chairman Leghorn. The good audio was about to happen. I know. Good audio was about. It was about to be somebody like on a hot mic, like, oh, finally, I need that payment from JP Morgan. This is disappointing, but you know what? Also predictable. While we've got our broadcast still going and we're streaming over on Twitter, we're streaming on Twitch. I discovered that we're actually banned on Twitch, or the channel is blacklisted on Twitch. We are actually outright banned. We're out, not shadow banned, and there are 0 viewers, and I used, we'll just say, I realized that it's not discoverable. Maybe because we're talking about cryptocurrencies.
Wow.
It's weird. Very, very weird. First Substack, now possibly Twitch. We'll see. The point is, when we're only allowed to talk about one thing, and we're only allowed to talk about it in one way, we're going to start having problems, right? Like that'll be an issue over time. Okay, gonna cut that in the background. Vincent asked, has anyone on the panel thought about what happens in the future if these stable issuers decide they do not want to buy fiat dollars or won the run treasuries? They will not be small forever. Yeah, no, they haven't thought about that because we can use all kinds of other assets for backing, and I'm glad you brought that up. I do need to disclose for the purposes of this live stream that yes, that these are my opinions, and I'm being extremely silly, right? We're doing hot takes and running this like Mystery Science Theater 3000, and I'm doing like funny voices and stuff. I'm being very, very silly. This is commentary and criticism. This is not actually any kind of, not meant to be any kind of financial advice, and it definitely doesn't represent the views of my employers or of any of the groups that I consult. Just need to make that very, very clear. But yeah, you can use other assets. You can back a stable dollar or stable coin with other assets. You don't need to use US dollars. And so for them to really push the narrative of it having to be a US dollar denominated stable coin that is backed one-to-one with US dollars is a very specific and very narrow narrative. Because what they're doing is they're saying, hey, take a look at these stable coins, take a look at these stable coins. Don't pay attention to what we're doing with the actual dollar itself, the underlying value. FedNow is that stepping stone towards a CBDC. And we know that there have been fundamental problems. Internationally, the US dollar is not being accepted. So yeah, how do we reconcile that? Well, you get people to focus on whether or not it's being distributed through blockchain, not whether or not it's sound to begin with. But yeah, should I cancel my huge circle JP Morgan limit order? I'm not going to tell you what to do. But yeah, I think that it's important to just realize there are other assets that could back a dollar. Let me ask you in the comment section, what do you think about assets that could back the dollar? I know of one in particular. Let me go ahead and bring up a tweet that I made on Twitter. Well, obviously made on Twitter the other day, but let me share my screen, show you exactly what it is I'm referring to. So over on Twitter, here is my tweet. It says, forget USDT, USDC, BUSD, and even DAI for just a minute. They're the primary ideal collar for regulators. Anyway, let me get this up on screen, the full view there. They're the primary ideal collar of regulators anyway. Easy to identify, trying to play by rules that regulators understand, and are working really hard to be accepted by the establishment. This has led to regulatory harassment. What I want to know is, what the hell is Section 106 talking about? Let's read the proposed moratorium definition. It's called Section 106, Moratorium on Endogenously Collateralized Stablecoins. I mentioned this on the live stream the other day. During the 2-year period, and this is their verbiage, 2-year period beginning on the date of enactment of this act, it shall be unlawful to issue, create, or originate an endogenously collateralized stablecoin not in existence on the date of enactment of this act. And then skipping down into Section 106 more deeply, they've got a definition. And in the exact verbiage of this proposed act, it says defined. In this section, the term endogenously collateralized stablecoin means any digital asset, one, which has its originator, in which its originator has represented will be converted, redeemed, or repurchased for a fixed amount of monetary value, and two, that relies solely on the value of another digital asset created or maintained by the same originator to maintain the fixed price. So think your Luna and UST. They did a good job here, clearly defining that. They actually did. I mean, we got to give them credit where it's due. They did a good job of defining what the problem is with systems of internal arbitrage like Luna and UST, because you can create a death spiral if you have your own funding source. Let's see. Getting friendly trolls in the comments. Yeah, thanks, man. So I think that they made a pretty decent distinction there, but they also set a term of 2 years, right? So 2 years following the passage of this regulation, if it does pass, it will not be legal to set up stablecoins like this. Then we'll have maybe some market data. We'll figure out whether or not that's made any kind of a difference in the stablecoin markets. If we have 2 years of a no new issuance on any of those systems, and then anything that was already created will either sink or swim over those 2 years. But let's take a look at the rest of this comment here. Let's see. So in layman's terms, if you want to make an algo stable, you will not be permitted to also make the collateral that it uses. at least for 2 years following the passage of these newly proposed rules. Here's my bad but handy analogy. You can probably make new tokens during that time, a hand. You can probably also make algorithmic stables that use a collateralized debt position of another token that some other dev or group has made, or a dollar-shaped glove. You just can't make both the hand and the glove for 2 years. The full text is available here at docs.house.gov, and I'm going to go ahead and share that instead of what we have on screen right now. It's really instructive, actually. The entire thing is there. MineYourBiz, you foresaw hand coin? Yes, I foresaw hand coin. Let's see. And also the comment, something not freezable by a third party and anonymous would be the ideal stablecoin, like cash, except on a blockchain. Right? That's totally accurate. The issue is they're trying to make sure that that's almost impossible to create, except that we can always find a way to, it's technology. We'll always find some way. It's a cat and mouse game. There are overzealous regulators trying to make a name for themselves by pretending like they're fighting crime. Everything they do is essentially just for show. It's theater.
That Sherman guy was
He's a slime ball.
what a joke. I mean,
Right.
it's just like, let me come out here and tell you how stupid my constituents are because they voted for me. I'm sorry.
It's crazy by comparison, right? That the New York, that the representatives from New York, at least were talking about actionable solutions. They
It
weren't
was
just trying to bring up boogeymen.
embarrassing. It was embarrassing. That was legitimately upsetting to me to see that like the one representative who spoke from California just came off like a complete idiot.
Yeah, well, that's Sherman
I mean,
for
you,
you.
you notice no one had any response to anything he said. It was like he was doing some kind of political ad campaign than actually speaking to like the issue in the room. All right, I'll calm down now.
Yeah, no, it's okay. I think it's totally warranted. The outrage is 100% warranted. It's just not the guy comes across as a complete ignoramus. He just does. He
Like,
never
I'm
sounds.
going to talk about scary drug dealers.
Yeah. Yeah, because we all know that they love crypto. So, but here's the thing. Drug dealers should love crypto. Everybody should love crypto. That's the entire point. It's dangerous freedom. Yeah. So let's see. Mr. Sherman's organ harvesting coin could be the future too.
Oh.
Baby organ harvest. Yeah. Baby seal organ harvesting coin. Getting right on it. Yeah. We'll issue it on BSC or Solana. So yeah, appreciate the feedback there. Let's take a look at this section 106 though. We've got all the others right. Definitions of 101 and yeah, or let's take a look through just the table of contents, right? You got section 101, which is the definitions. 102, the requirement to be a payment stablecoin issuer. 103, state qualified payment stablecoin issuers. 104, enforcement, interoperability standards, a moratorium on endogenously collateralized stablecoins. So basically, getting rid of the Luna UST problem. And then last couple of sections that they have in here: reservation of authority, assessments, extraterritoriality, and then Title II, the digital dollar. Sections 201 and 202 are on researching Federal Reserve digital dollar and briefing on central bank digital currencies. Now, they very conveniently didn't talk about Title II at all in that meeting, not even a little bit. The whole thing is they're trying to soften us up for some kind of enhanced regulation towards KYC, AML. We're like as was mentioned in the comments, they're trying to soften us up for acceptance of all of the depository requirements being decided in New York, and then all of the custody being done in New York, and then yeah, being okay with some of the de facto standards that are being put in place by USDC, and USDC becoming the de facto CBDC before we actually get a CBDC. So pretty cut and dry what they were trying to do in this meeting. They weren't necessarily trying to actually make any decisions at all or get any real clarity at all. A lot of it was for show. And I'm sure that a lot of this regulation is just going to pass exactly as written without any additional comment or changes for the most part. Except for Maxine Waters in the beginning made it seem as though she was willing to drag her feet. That was the only bit of pushback, was that she made it sound as though like, well, the Republicans are controlling, they're controlling the House right now. So we won't let anything go through because the Republicans are controlling the House.
Wow.
It's like, this is totally like, there's no partisan language in this bill at all, or in this recommended legislation at all. So figure that one out. Nobody else did that, by the way. Nobody else did that that whole song and dance of like, well, if they're proposing it, then we're not passing it.
Well, I'm sure she's trying to avoid anyone pulling up any pictures of her
With
shaking,
SBF.
shaking hands with SBF.
Oh my gosh, we need to just do a music video of all those politicians shaking hands and sitting with SBF.
Mm-hmm.
Okay. So let's take a quick look at section 106. This is what I found was most important. In my view, this is where, and I'll just be very, very clear, smash that like, be sure you're supporting, be sure you're sharing while we're live. But in my view, section 106 is what we have to focus on right now. And we need to get support for, potentially just support for this legislation going through without any further comment or whatever. So we just have clarity as to when it's going to be put into law so that we have an amount of time to deal with section 106. Okay, I keep on mentioning section 106. It just has to do with collateralized stablecoins. It's the only side of this legislation where collateralized stablecoins are even mentioned. And they don't say exactly what type of collateral can be used. They say endogenously collateralized, but the rest of this entire thing, and we just need to know that there's any kind of collateralized stablecoins that can be that can be accepted with this regulation. So that's what I want to focus on. Paul D says the moratorium will probably be extended indefinitely if it becomes law, or there will be a permanent law enshrining circle. Yeah, no, totally. That's going to be the de facto outcome. I think you're right. Is that they're always going to interpret it that way, essentially, that it enshrines and entrenches USDC, makes them the incumbent, which is ridiculous because, again, by the numbers, they have the lowest on-chain usage. So anybody who's talking about banking the unbanked or making it exporting the dollar to international markets, they're full of crap because USDC isn't used that way. Tether is used 10 to 1 in that way, like easily an order of magnitude more than USDC. And BUSD also just like eats Circle's lunch. So you're probably right. Absolutely. But let's jump into section 106 and just take a quick look at that. So stablecoin issuers, you can talk about some of those things. But you're right. If we have genuinely permissionless protocols, then I think we're in better shape. I should have had this bookmarked. I know I should have had it bookmarked. Thank you so much for your patience while I look up the section 106 because this is a little bit tricky to navigate. Or is it? There we go. 106. That'll be a little bit easier. Find replace. There we go. I caught my marbles again. Just lost them for a second. All right. So section 106, page 64, and line 18. Moratorium on endogenously collateralized stablecoins. We already went through this stuff. Study by the Treasury. The Secretary of the Treasury, in consultation with the board, the comptroller, the corporation, and the Securities and Exchange Commission, shall carry out a study of endogenously collateralized stablecoins. The report, not later than 365 days after the date of the enactment of this act, the Secretary shall provide to the Committee on Financial Services of the House of Representatives and the Committee on Banking, Housing, and Urban Affairs of the Senate a report that contains all findings made in carrying out the study under subsection A, including an analysis of the categories of non-payment stablecoins, including the benefits and risks of technological design features. The participants in non-payment stablecoin arrangements. So this may be why they have the moratorium. I think that's why they're framing it as the reason for the moratorium is so that they can do this study in the first year following the passage of the regulation, trying to figure out, like, they're basically admitting ignorance. They don't know that this is a real opportunity, or they're pretending not to know that this is a real opportunity to replace toxic rotating debt of our dollars with some other type of algorithmic pegging or collateralized backing for dollars that have a proper liquidation threshold and have a threshold for failure or success. The nice thing about collateralized stablecoins is that with a collateralized debt position, if it reaches a liquidation point, you liquidate the backing, you sell it at market rate, and that way the backing is always secured. Like it is a slightly more complex system, but it's a lot less complicated than trying to figure out credit ratings and decide whether or not the US dollar is good internationally, because it has lost we've lost our credit standing. We've been getting downgraded internationally for some time now. And collateralized debt positions, over collateralized stablecoins do not quite have that same problem. We don't even need to make the stable value a US dollar. In crypto, we could absolutely move away from using the US dollar as our unit of account. We could absolutely move to the pound sterling. We could move to the euro. We could move to anything else. And while it would be painful as an American to see us do that, like I'm prepared to start counting my trades in euros if that's what it really takes to just survive in this ecosystem. Vincent says, yes, Seth, but they do not like the idea of the treasuries being liquidated, only the idea of them being bought off the run. Right. Yeah, that's their only playbook though, right? They're always trying to sell their own crappy bonds, right? They're so anyway, point is it doesn't even have to go there. We can collateralize with commodities, right? We don't necessarily need to have treasuries or other securities. We can fully work within commodities. There are enough. And you talk about attestations. Okay, well, do you have a warehouse full of what you say you have? Wheat, corn, oil. What do you have there? Like, it's not rocket science. We can figure out a way to set up audits that instead of pretending like there's some warehouse full of cash, there's no warehouse full of cash. For USDC Circle, they don't have a warehouse full of cash anywhere. They don't have pallets. I mean, and they try to evoke that imagery, right? Of like, we send foreign aid, we send pallets of cash. What? That's not how the backing is done. I mean, anyway. Mrs. MineYourBiz saved me from myself. I'm going to rant until I'm blue in the face here.
Oh, but I love it when you rant.
Okay, well, let's talk a little more about Section 106 here. It looks like they want to do this analysis within a year of setting the moratorium. So, categories of non-payment, benefits and risks, the participants in non-payment stablecoin arrangements, interesting, utilization and potential utilization of non-payment stablecoins, nature of reserve compositions. Hey, there you go. Types of algorithms being employed, governance structure, including aspects of decentralization. And all of this is going to be competitive intel so they can come back with stronger recommendations for the CBDC to be something that they can control more tightly, of course. But they're at least laying out what they say they want the framework for the analysis to be. So yeah, moving on. Nature of public promotion and advertising. That's the big one. Public promotion and advertising, we got to be really cautious about, because you don't, I mean, whatever, we don't here on most YouTube channels where we're talking about cryptocurrency, we're not saying like, you know what's a great idea? You should go have dollars in your bank. You don't promote currency. You can promote Forex, you can promote trading currency, but nobody promotes actual currency. So it's weird that they would even say that there's a question of promotion now. So I think really what they're saying between the lines is this is where they do the research to try to stick it to anybody who promoted Terra or Luna or UST or Luna. Vincent also mentions you can collateralize with Bitcoin. Yes, you can. It's a great use case. And I don't know why we're not doing this. It's driving me crazy. I'm wearing the TBTC shirt right now because I think that they're sufficiently decentralized for it to be used as collateral, as opposed to trying to wrap Bitcoin from scratch and have the smart contract govern both the wrapping of the Bitcoin and then also the issuance of the collateralized stablecoin. And that would actually also violate the proposed regulations here if you did both, wrapping the Bitcoin and using it as collateral. So something like this could be used as collateral easily because it's already an ERC20 token, easily to then create your collateralized debt position, issue a stable store of value. It doesn't have to be denominated in US dollars. It could be denominated in euros. It could be denominated in yen. Sorry, US, you don't want to play? You don't want to play nicely? We can make it denominated in any stable store of value that you want. Anything that has market value that people understand. So yeah, you're right. It could be collateralized with Bitcoin, and we have so many options for doing that with ERC20s. Do they actually send pallets of cash to corrupt governments, though? They're just anticipating what they know. No smart contract needed. Yeah, there's plenty. There's plenty of boilerplate smart contract code out there that makes what they're describing a reality. We could be collateralizing with Bitcoin today. Do I need to do it? I don't know. Maybe somebody needs to do it. Somebody needs to do it. Yeah, can be backed by, but pegged to use BTC. Look, I know that BTC on its own can be used and it can be useful. The reason that dollars are still used is because they are useful. The reason that Tether has more marketplace volume than Bitcoin is because people are willing to accept it. You have to people on the counterparty side of your counterparty has to assume the risk, right? And Bitcoin is not great at solving counterparty risk. It's really great for a lot of other things, not great at solving counterparty risk. Well, a Bitcoin CDP for issuing a stablecoin gives you both, right? Permissionless and totally eliminated counterparty risk. That person can always convert back to Bitcoin should they choose. But yeah, in the marketplace, yeah, you want to limit the counterparty risk. Chargebacks are not really the biggest counterparty. They're not really the biggest risk in commerce, but having slippery value for the base currency, the base layer of what you're transacting, is a bigger problem. So that's why stablecoins are so bloody useful. I hate to admit it because the permissionlessness of Bitcoin is great. It's preferred, but yeah, there are too many people. I mean, we saw this in El Salvador. We had a driver. It was before you joined me for ETH Denver. I had a driver, an Uber driver in Denver, who's from El Salvador, and he said, "Yeah, everybody who I know hates Bitcoin because they were airdropped $30 worth of Bitcoin at the top, the peak top of the market, and so you have these ultra poor people in El Salvador watching the value of their Bitcoin holdings get slashed. You can't do that in those markets. Yeah, they're used to their base currency, like their fiat currencies, doing kind of poorly. But when you do that with a cryptocurrency, they lose faith in that system because they need to buy bread. So I get it. Bread and circuses lead into how you keep like a large population of people happy. But if you mess with people's bread, like the circus is optional, but if you mess with people's bread, they're gonna have issues. Yes, sorry, they didn't get an airdrop in 2019. It would be great, right, if they did. They just didn't, and they're gonna be right side up before too long. But you have people who are not an investor class of people. They don't understand investment fundamentally. They understand currency to be able to purchase in the market. So it's not as simple as just telling everybody, all right, like figure out how to put on your investor cap and have a long time horizon, right? Have a low time preference. If you're telling that to somebody who's literally starving in the street, they're going to look at you like you're crazy. They need
to not die.
Yeah,
first.
Exactly. Like it just doesn't. You can't have it both ways. You can't have people who are unbanked and who need these services so desperately, and then also expect them to be investor class people. They're just not. So yeah, that's why stablecoins are so bloody useful. They really do kind of bridge the gap between the people who want to get exposure to cryptocurrencies and then optionally have a direct exposure to something a little bit more speculative and still permissionless with Bitcoin. And yeah, people who have practical daily needs. So anyway, jumping back into section 106 really fast here. Clarity and availability of consumer notice disclosures. Yeah, consumer notice disclosures. Just like telling people that cryptocurrencies are like that there's counterparty risk by way of chargebacks, like no chargebacks. I'm not totally sure that I know what they're getting at there, but we went over the definition already, and that's all they had for this, right? That's really all they had, was to say that they wanted to avoid anything like the Terra UST pair being launched during that time. Yeah. So, hey, it's okay. Hey, Vincent, here's the thing. I welcome disagreement. So, Vincent says, I disagree. Still think you can price any item in dollars and pay an equivalent amount of Bitcoin for it. You don't have to be sorry. It's all right. You totally can. You're right. The issue, I think, when it comes to holding it, and when you bring an unsophisticated user of crypto, when you airdrop them Bitcoin, like we're seeing in El Salvador, is that you find that people, they don't know how to maintain the value of their holdings. And if you start, like people always say, well, one Bitcoin equals one Bitcoin, but you're talking about pricing things in USD. So no, one Bitcoin doesn't equal one of what you're talking about. So there's that arbitrage in the markets between what you have in Bitcoin and what you need to spend in its US dollar value. So, I mean, I can totally agree that there are people that can get by just using Bitcoin only. Plenty of OG cypherpunks that do it, right? But I'll just say that in conversations with people that have done that over the last 10 years, like people who are diehard, been in the space since like 2011 or 2012, most of them don't have anything to show for their Bitcoin holdings, despite the fact that they've been holding Bitcoin since 2013. Stings, right? And then there's the investor class in Bitcoin and in cryptocurrency that are just making it big time. Yeah. Yeah, there you go. So the necessity for stables, I'm just going to agree with you on that. Like, no, we don't absolutely need stables, but we also wouldn't have had $20,000 Bitcoin without them, period. Tether made the 2017 run-up possible. And frankly, stables more broadly, USDC and BUSD and DAI and all of the other asset-backed, like the other collateral-backed stables and everything else, right? Even the algorithmic stables, they are what made the following run-up when we saw our all-time highs in 2021, right? In 2022, like when we had that double top between 64K and then 69K, stables made that possible. The high frequency trading on exchanges and then the on-chain activity made that possible. So yeah, I agree. We don't absolutely need them. It's not a necessity, but they're really bloody useful for all kinds of things, including price speculation to drive up the price of Bitcoin. So Richard Works has a comment as well. Get here.
Let me read it.
Please.
You don't want to back BTC when coins can be abandoned or just have 1 million sitting in one wallet and nobody knows who owns it.
Okay, so you're saying with a stable coin, you don't want to have it backed by BTC. All right, I mean, fair enough, I guess. Yeah, I guess. I mean, I don't know that it matters though. Here's the thing: Bitcoin. There's a significant amount of the holdings that are pseudonymous minimum. There are a lot of old whale wallets where the ownership is not clearly understood. So maybe, but the moment you back a stable coin, that you will have sort of either custodial on ramps to be able to, like, maybe it's not custodial, but even just a smart contract could be viewed as custodial, right? The custodian of those Bitcoin, and we've got a pretty well mapped out custody backlog of the Bitcoin network. So if people have been holding their Bitcoin for the last 10 years, and they were fresh Coinbase transactions, meaning that they got them directly from the network, they didn't buy them from an exchange, they just mined them on a computer 10 years ago, then it's uncontroversial. And it doesn't matter where they came from, right? They're fresh coins. The provenance is less important, actually, than the fact that we are then minting new dollars from them or minting new stablecoins from them. Paul D brings a very common sense comment. Stables make prices easier to understand. Yes, they do. Unfortunately, we don't live in a world where people are denominating the prices for any goods or services in Bitcoin or Ether or Monero or anything else. They're just putting dollars on them. And I really hope that we don't move into a world where the price tag is printed in yen everywhere or euros everywhere. But yeah, stables help a lot. So yeah, that was section 106. It's pretty sparse, actually, what they have to say about collateral backed stablecoins. But I think it's important. I think that algorithmic stablecoins, they really are far more important than they're letting on. And we don't necessarily have to use Bitcoin as collateral. That was a great comment there. We don't have to use Bitcoin as collateral. We can use other cryptos as collateral. We can use commodities as collateral. If you want to do attestations, if you have to do audits of a supply of money anyway, then why wouldn't you just use commodities or other securities? Like why wouldn't you just use like anything else that stands in? Because at a certain point, when you talk about like USDC and $40 billion worth of USDC, and they revised it actually for that hearing because USDC's market cap shrank pretty fast leading up to this. So I don't know what they were doing with their books there, but they talk about like institutional paper, right? Commercial paper holdings, which means that they do not have dollars. They're dollar equivalents. What the hell is a dollar equivalent? Please make it make sense, right? When you say you're one-to-one backed with dollars, but then you say you have commercial paper and it's dollar equivalents. If it's not liquid, if you can't actually make it liquid immediately to cover any kind of a call, then what are you really saying about your holdings? It means that it's not a one-to-one backing in a bank where you have a cash, like like definite cash. You're saying it's cash equivalents. I mean, I have a problem with all of that. If it can't be made liquid immediately, a commodity can be sold for whatever the best possible value is, like spot value, and then it is as liquid as the market. But saying that you have cash equivalents, what are they liquid? Can you prove that? And yeah, so that's where I have a problem with all of this. All of us just, these hearings saying, well, the dollar is the best. Oh yeah, because you think you can make it liquid by just printing more of it. I don't know. Yeah, I'm pretty fiery on this topic. I would love to see massive sweeping changes in the crypto industry. I think there's room for disruption. I think it's massive opportunity still, even with regulation like this coming out. I think there's massive opportunity for disruption in the cryptocurrency ecosystem and in the stablecoin ecosystem in particular. I think that we're living below our privilege in crypto right now. And yeah, oh my gosh, I keep on seeing somebody shill in my comments. They've literally used a bot to shill in my comments over on Twitter that they want me to take a look at a project that is an over collateralized confidential stablecoin on the Beam network. I am resistant to those kinds of solutions because they lack TVL. So yeah. Oh my gosh.
Having 90% in 90-day treasuries isn't super liquid.
But that's what Circle is saying they have by way of commercial paper that is a cash equivalent. Yeah, this stuff is crazy. And yeah. Anyway,
well,
that was a long rant. We've been going for almost 2.5 hours. Definitely appreciate you being supportive here on the channel while we live stream that House committee meeting and we talk about cryptocurrencies and stable coins and the upcoming potential regulation. You are the reason that we make this media. Love your face. Remember to stay private and mind your biz.